So, good morning, guys. So, we'll continue with the same discussion. Now, we'll begin with SQC1, quality control for the firms. So, what is this quality control for the firms or SQC1? See, if you look at this entire curriculum of CA Inter, there are two standards which are interconnected. One is SA 220 and SQC1. Sir, what is this SQC1 and SA 220 difference? If you look at the heading of the SA 220, that talks about quality control in an audit. SA 220 is in an audit. But if you look at SQC1, that looks like quality control for firms. So when I say a firm can render multiple services. They can render audit services also, other than audit and assurance services also, consultancy. Many services they can render. But whenever they are doing the audit, they should compulsorily follow SQC SA 220, because that is specifically applicable for an audit. Audit means wherever any assignment is being happened with respect to expression of an opinion, that is called as an audit. But when it comes to SQC1, not just about the audit. If you do any work, as well as within the entity, within the firm, how do you appoint, how do you recruit, how do you remove somebody, how do you give the compensation, how do you accept the client, how do you monitor the team, do you have a sufficient team or not for anything, that you have to take care with respect to everything in SQC1. So for our discussion, first we will discuss SQC1 fully, then we'll go into SA 220 just for comparison purpose. So for what is important, see, SQC1 and SA 220 put together definitely come for 5 marks in the examination. And ICA will drop you with respect to whether you get confused whether it is an audit SA 220 or SQC1. You should be very careful. Sir, how can we be careful? We will look it into the question bank. You will understand. The main distinction factor is you should see whether it is they use the word audit or other than audit, just the forms. So it depends on that. If the moment it is audit, it is SA 220. So in SQC1, it is quality control for the firms. The full name is different. There are 4 types of services: standards and auditing, SREs, SRS, SRE, SAE. So that everything has to be complied with respect to quality part. So now SQC1, quality control for firms, there are mainly 6 elements in SQC1 as well as SA 220. We call that 6 elements as what? Lehema. Lehema. We discussed it as in the regular class, Lehema. So what is this Lehema? Every firm should always comply with these 6 elements. First one is leadership, responsibilities, again ethical requirements, human resources, again engagement, performance, monitoring, and last one is acceptance and continuance of a client relationship. First we will see one by one. See, every point has a chance of being asked in the examination, then there is high chance of being tested. First one is leadership responsibility for quality within the firm. Leadership responsibility for the quality within the firm. Now, the firm's quality control system should override its business strategy. That means they should always mainly focus on quality rather than the getting money. So it should be ensured that see, when I say leadership responsibility, in Kannada we have mane mandi, sorry, iryakanchale mane mandigalla anta heli. So what does that mean? The way leader acts in a firm, the same way the employees, subordinates, everybody starts acting like this. If the leader starts coming at exactly 9 o'clock to the office, then everybody will come before the leader only. If the leader only comes at 12:13, that is 1, 2, 3, then everybody act like them only. So firms assigns management responsibilities so that commercial consideration do not override quality of work performed. Just because you want to get more money does not mean that you get more and more work. Just do it the way you just want to do it. No, you follow all the standards, keep the standards for your firm, and try to follow everything in every assignment. Don't try to just look at the money rather than think. It is like quality over consideration. This point is important. Consideration or money. Again, firm should establish policy for its personnel means people, demonstrate firm's overriding commitment to quality. They should always tell in their policy everywhere, their first priority is always quality. Always quality, quality, quality. Whenever you read something, the moment people read it, oh, they should come to a conclusion, okay, the only thing which I should take from this is quality. I should never compromise on quality. And before accepting an engagement, firm should have vital information about the client to decide about integrity of client, competence of and compliance with the ethical requirements, then firm should devote sufficient resources for development of quality control system policies. Sir, you tell me, sir, why this SQC1 is required? See, consider I am there in a firm now. I thought we will do some policies. Consider we did it in a oral format. But what if tomorrow I'm gone. Then again we should sit and discuss or tell everything to every employee, new employee and everybody. It is better to document everything. Na? So whenever a new employee comes and recruits into the firm, just give them the user manual. See, this is the things you should compulsorily, you can't what is this override. These are the things which are compulsorily required from your end, so everything has to be taken care. So you just, that is why everything has to be documented in respect of firm also, in respect of audit also. Anyway, audit is as a 230 is taken care. Here firm is SQC1 mainly. Then comes second part is ethical requirements. Sir, what is this ethical requirements? Ethical requirements with respect to what? Is it regarding the client or is it regarding the auditor? Independence is the basic requirement which we discussed in our ethics chapter, independence of mind as well as appearance. Policies and procedures should enable the firm to communicate its independence requirements to its personnel. See, every firm should have such policies and such communication policies stating that, okay, the moment you see a person, he is independent from the entity. The moment consider some 10 partners are there, one partner is being appointed for an auditor of one company. Now, the moment it is appointed, it means firm has already complied with all the ethical requirements, then only he is being appointed as an auditor. That policy should be even there. Again, the policy should also there identifying and evaluating circumstances and relationships that might create threats to independence. For example, if any partner is there and the partner's wife or relative is a director or any top level position in the company, that means there is a threat to independence. Maybe advocacy threat, maybe familiarity threat, maybe self-interest, any threat can be there. Your firm's policy should be in such a way that it should easily identify there is a threat or not. Then again, you should take appropriate action to eliminate those threats or reduce them to an acceptably low level by applying the safeguards. If not possible, withdraw from the engagement. We even discussed in ethics also, where if you are not possible, if try to or this relieve from the work, if not eliminate the India or this threats, if not possible, reduce it to an acceptably low level. I think I give an example of your relatives purchasing more than 1 lakh rupees worth of face value shares. That is there. Again, you ensure that independence breaches are promptly notified to firm for appropriate action. For example, earlier, whenever you are being appointed as an auditor of some or you are being performed and work in some work of the firm, later one of your relative has appointed the director of the company. That means there is a breach of independence at later point of time. Then you make sure that firm should have such policies that whenever there is a breach, the people should come and immediately tell to the firm, or firm should be in that position that they should be easily trying to identify that thing. At least annually, firm should obtain written confirmation and compliance with respect to policies and procedures on independence from all the firm personnel. That means every year you ask everybody, are you independent of everything whatever we are doing with respect to client? At least once in a year. Generally, if it is a big four or top level firms, they do it for every assignment, not every year. Consider some 10 people want to be part of a engagement or something like that. Okay, for those 10 people, they'll take an independent what is this requirement. Everybody is, are you independent? Are you independent? Are you independent? Everything, give a written representation. Then we can go to the work. That is all they do it. There is the second part. First one is leadership responsibility. Second one is ethical requirements. Third one is mainly for acceptance and continuance of acceptance and continuance of client. The main word is acceptance and continuance of client. But whenever you want to accept the client, there are two things which you have to consider: the integrity of the client, which you are seeing always, whether the client is the right client or not, or can you deliver the thing, or will he allow us to deliver you the thing which has to be required. Next one is, are you really competent enough to do those things? Do you really have sufficient skills and competent team in those things? Before you accept any engagement, firm should acquire vital information about integrity of the client. A client comes to you running, stating that sir, there is an income tax raid which is happening. I want you to please protect me. Or he tells that sir, you accept an audit. of my company. He told, okay, whenever you want to accept, but before you check it, is the, what is integrity of the client? Integrity of the client is like the moment you find out some observation, like a past auditor, what happened is, the moment you find some observation, you immediately remove the auditor. Or the moment is trying to find some observations or some fraudulent activities in a company, they try to restrict the limit by way of limitations. That means client is already involved in money laundering activities, many things which are already happening with respect to a client. Then you try to think whether should you accept the engagement or not. Again, competence including the capabilities, time and resources with respect to your part. Integrity of the client is checking from the client's point of auditor's point of view, check the client. Again here, checking the auditor from auditor's point of view only. Okay, new client has come, I agree, but always we told that in the ethical requirements, quality should not, like consideration should not be overtaken by quality. Or quality should not be overtaken, should be overtaking always the consideration. Just because the client comes, it does not mean that you should immediately accept the work. If, do you have a sufficient team? Do you have sufficient time? Do you have sufficient resources to give the best quality services? If yes, then accept it. If not, never accept any engagement. Again, you check whether are you compliant with ethical requirements or not. One is you are eligible to do the work, I agree, you have everything. But really you are ethical with respect to compliance with ethical requirements like what is this? Threats to independence, fundamental principles of ethics, all those things are being complied with respect to that claim, then accept it. Later, significant matters arising during current period or previous audit engagement. If issues identified and firms decides to accept, then document how issues were resolved. Consider you found some issues with the client and still you decided to go and accept the client, then you document it how, on what basis you are accepting the client. What is the convincing point for you to accept that client? Why don't you reject that client because of the other things? Now when I say integrity of the client, say this is a 5 marks question, many times this is tested. All the 6 points is important, but highest tested is this one, and one more thing is there, EQCR. How do you consider with respect to integrity of the client? So first thing which we have to consider is, what is the reason for appointing me as an auditor? Why is not appointing the old auditor only as a reappointment is being done? Why is coming to a new auditor? Sir, the answer is, the old auditor has only 5 years rotation period, he is completed, now he is in the cooling off period, now he wants some other auditor. Okay, that is as per statute, that has to be done. But before 5 years, only after 3 years he removed and somebody else is being appointed, then you should seriously check into the issue of the thing. So reasons for proposed appointment of the firm and non-reappointment of the previous firm, because they might have told that, sir, we are not convinced with your audit evidence, because of which we will issue qualified opinion, adverse opinion, then they might have removed him immediately. Then nature of client's operations. What is nature of client's operations? You check, are they really into such operations which are legally acceptable, or are really into such operations where government is always trying to find some loophole or this mistakes and get into the right and all those things. Identify the business reputation of clients, principal owners, key management and TCWG. See, it is not just the business, the people who run the business also is important, because business does not have any reputation, the people who runs always has the reputation. Reliance has the reputation mainly because of Mukesh Ambani. Tata Motors has the reputation mainly because of Tata brand. Because of which you should always check the principal owners, the client's principal owners, what is their reputation. Sir, they are very good, sir, they are honest people, they never do the cheating of anybody, then that's okay, you can go and accept it. You consider integrity of client with respect to that also. Again, information regarding attitude of clients, principal owners, key management and TCWG. Are they considered just auditors as just normal people and they tell that, okay, I don't care who you are, you just, I'll throw the money, you do the work and get out. No, then don't try to rethink about acceptance of client. Indications of inappropriate limitations and scope of work. They're trying to tell that, sir, don't come to today's work, sir, complete within 2 days the entire audit. Unnecessarily, inappropriately, they're trying to impose some limitations. Then you should rethink with respect to anything. Whether a client is aggressively concerned with maintaining the firm's fee as low as possible. Sir, we can give, I quoted 1 lakh, 10 lakh rupees as a fees, but he told, sir, we can give only 1 lakh rupees. If you want, you can do only 10% of work, I don't have any problem, but just give me the report. That means he's trying to keep fees as low as possible, because there is 2 possibilities. When I get lesser fees, I always feel that why should I give more with respect to audit services? If I put the same effort somewhere else, I would make some extra money also. So that is why you should even consider that. Last one is indications that client might be involved in the money laundering activities or other criminal activities. If there is any of those cases were there, then don't accept the client only. With respect to capability, competence and time and resources, that with respect to from audit point of view only, you should consider these things. As an auditor, when a client approaches you, whether your firm, people, personnel have knowledge of relevant industry. Sir, we are firm, we are always into the bank audit. Now an insurance company has come for appointing me as an auditor. You check whether your personnel has competence or knowledge with respect to insurance audits or not. If yes, accept it. If not, don't accept it. Refer somebody else. Firms personnel have experience in PRL requirements or ability to gain necessary skills and knowledge. Firm would be able to complete engagement within the reporting deadline. That means, do you have sufficient time to complete within the time which is allowed for you? Firm has sufficient personnel with necessary capabilities and competence. Time also should be there, people also should be there, and those people should be competent and capable enough so that they can go and do the work properly. Experts are also available if it is required. Individuals meeting criteria and eligibility requirements to perform EQC are also available. EQCR is also required because every firm, if he is auditing the listed company or other companies which are voluntarily basis, they should compulsorily appoint EQCR, engagement quality control reviewer. Whenever you accept such a client of which are listed and all those things, EQCR also should be there. Without EQCR, you can't appoint or getting appointed as a auditor of anything. Declining engagement policy addresses. These things are okay. To do that. So here there is a possibility that they may ask this as only 5 marks question separately, or the competence and capability can be asked as 5 marks question, 5 or 4 marks question separately. This is very important with respect to SQ7, acceptance and continuance of client relationship. Then comes human resource, a simple thing. Policy and procedures for human resources requires that mainly they're talking about how do you have a HR team, how do you recruit the people, how do you pay the people, how do you recognize their talent, how do you promote them, how do you demote them, all those things are being there here. Engagement partner has appropriate capabilities, competence and authority and time to perform the role. Again, responsibilities of engagement partner are clearly defined and communicated to that partner. See, this is what you should do from the beginning of the audit till giving the audit report. This is entirely your responsibility only. You don't come and tell that I don't want to give the report, I don't want to send it. No, it is not. Again, identify and role of engagement partner are communicated to clients management as well as TCWG. I think one point is missing here in human resources. Recruitment, compensation, promotion, that is there in the main material. Clear development, all those things that you keep it in mind. That is also an important point. Read it once clearly. Issues are recruitment, training, career development, performance, etc. These are the 5 things which has to be always had by a human resource team in a thing. Then comes, this is also very important, EQCR, engagement performance and EQCR. So consultation takes place in difficult or contentious matters with individuals within or outside the firm. What is consultation? Whenever you have doubts with respect to how to treat this item, how do we deal with respect to audit evidence, then you can go to the consultation. On what matters, on difficult matters are contentious means this ambiguous or ambiguous matters. So now comes EQCR, very important part. EQCR only has a chance of being asked in the examination for 5 marks. Who can be an EQCR? Member of ICI or suitably qualified external person. Sir, you tell me, EQCR, consider I am as a chartered accountant working in a audit engagement. Now some become guy comes and tells that you don't do this, you do this. Do you think will I listen to him? Definitely not, because he does not have sufficient capability and competence to tell me. So when I tell that, when we tell that EQCR should be there, EQCR should be there at least with respect to the same level or at the higher level of an engagement partner. If my brother, younger brother comes and tells me, I tell, hey, Ogle, that is what we tell. But when my father comes and tells, that we obey it. That is what there should be there with respect to EQCR. EQCR should be always, generally should be at a bit higher position than the normal engagement partner. Then only engagement partner, and there is something which we can at least equal or more. For that, member of ICA should be there. Sufficient competence and capability should also be there. Or a team of such individuals. Either it can be an independent party or it can be an individual team of individuals. For audit of listed entity, EQCR should have sufficient appropriate experience and authority to act as engagement partner on audits of listed entities. This is compulsory. For audit of listed entities, EQCR is mandatory. There is an MCQ question also. EQCR is mandatory for dash, it is compulsory for listed entities. Sir, other entities, firm may try to have it on voluntary basis, not on compulsory basis. So reviews, what he does, he reviews a significant judgment EQCR, but it will not reduce the responsibility of engagement partner. He will just see that whatever the opinion the engagement partner has come, whether that opinion is correct or not. That is done by EQCR. But just because EQCR is checking the engagement partner's opinion and other judgments, the engagement partner's responsibility is full only. It is not being reduced because he is the person who is signing the audit report. Mandatory for all the listed entities. For others, firm should form the criteria. It is voluntary. For others, it is not mandatory. What is EQCR objectivity? EQCR should be objective and should not participate in engagement or making decisions for the team. That means you should never get into the field of audit. You should always sit in the office or somewhere else. You never tell how you do this way, you do this way. Don't be part of anything. Just let them do whatever they want to do. Whenever they come to you, just then you review it. The moment you are already in the part of engagement team, there creates something called a self-review threat. Because you already performed the work and you are being asked to review the same work. That is not going to happen. You are not going to find out the mistakes. That is why you should not participate in the engagement team decision making. Then engagement partner may consult EQCR during engagement, but must not compromise on EQCR's objectivity and eligibility for the role. That means if any engagement partner has any doubt, he can go and ask EQCR, engagement quality control reviewer. Sir, I am getting doubt. How can I do this? That engagement quality control reviewer can guide him, give the suggestions, but that should not create any threats to the independence being an EQCR. Independence should always be maintained. Again, if consultations become significant and objectivity cannot be maintained, that means you can't be a distinction with respect to EQCR or engagement partner. Another individual should be appointed as an EQCR or person to be consulted. Either you become one role or go to the other role. Don't be in both the roles. Now, EQCR matters for listed entities. What he has to mainly check engagement quality control reviewer. He should evaluate team's evaluation of firm's independence for specific engagement. Are we really eligible or not for the specific engagement? That also has to be checked. Significant risk identified and responses which are being given. Judgments made by the firm or engagement partner, particularly with respect to materiality and significant risk. Sir, how do you consider something as material? It is a professional judgment. Somebody may consider 1% as material, somebody may consider 2% as material. It is a judgment of an auditor. Again, significance of corrected and uncorrected misstatements. Significance of corrected and uncorrected misstatements. I told some mistakes were there, then it is being corrected by the party. Whether that is significant mistakes or non-significant mistakes, insignificant mistakes. Whether appropriate consultation has taken place and conclusions arising. In conclusions arising. That means you are while you are doing the audit, you had some doubt. Okay, you consulted somebody. Okay, did you felt that is appropriate or not? If it is appropriate, then you arrive at a conclusion. If not, then try to get one more consultation and all those things. Whether working papers selected for review reflect work performed and support conclusions reached. That means the moment I take the working papers, everything, okay, auditor has done it in the right manner. This is what every auditor has to compulsorily do it. So that means whatever he has done it, that will reflect the work performed as well as the conclusions reached. It is not like some erroneous thing. Again, what matters to be communicated to management, TCWG, and other parties such as regulatory bodies. That also has to be checked whether it is done by engagement partner or not. And again, appropriateness of the reports issued. Did the auditor really issue the report which is appropriate in the circumstances? Actually should have been issued modified, but he actually issued unmodified opinion. Should have been actually issued adverse, but actually issued qualified opinion. That means, is it appropriate or not? Appropriateness of the reports issued. EQCR has to check everything. And once it is done, EQCR documentation also has to be done. Procedures required by firm's policies on EQCR have been performed. That means whenever engagement quality control review happens, you document that procedure also, how this is being happened, so that EQCR also can protect his interest. Sir, they gave the thing, I performed the quality control review also, everything was, at that time it is right. Later they change it, I don't know it. You can protect your interest. Again, EQCR completed before report is issued. That means before the auditor engagement partner issues the report to the client, EQCR should be completed. EQCR should tell that, okay sir, you can go ahead. Then auditor has to issue the report to the client. Reviewer not aware of any unresolved matters that would cause the reviewer to believe significant judgments made and conclusions reached were not appropriate. That means if you don't tell any matters which is required to be told to EQCR, and but you based on that you issue the report, that is not appropriate for the engagement. You should discuss every matter with the EQCR and come to a conclusion, and then later you have to issue the report. Again, this is an MCQ or maybe 3 marks question also they ask. Difference of opinion. That means audit engagement partner told I want to issue on qualified opinion. Then engagement partner is telling, engagement quality control reviewer is telling that no, you should go for adverse opinion. That means there is a difference of opinion. One party is telling one thing, other party is telling other thing. Then what you should do? You should go for try to resolve the matter within the firm. If not possible, whatever the policy of the firm is there, policy of the firm tells that go to the third auditor and tell what is the situation, let him decide what has to be done. No, if there is no policies, then as per the standard that tells that. So report should be issued only after the resolution. Only after resolution means only after the solution. If recommendations of EQCR are not accepted, if recommendations of EQCR are not accepted by engagement partner and matters are still not resolved, then it should be resolved by following the established procedures of the firm, such as by consulting with another practitioner or firm or professional or regulatory body. Then only you can issue the report. Without resolving anything, you can't issue the report. Then last two are engagement performance. Engagement performance, you should perform everything. Along with that, you should document mainly the file thing. You should complete the assembly of final engagement files on timely basis after reports have been finalized. That means the moment you complete the audit, the moment you give the audit report to anybody, then you should do assembly of engagement files. Assembly of engagement files means you put together everything in a single place, maybe electronically or maybe physically, once it has been finalized. Engagement files should be completed not more than 60 days after the auditor's report. Consider we issued today's audit report, then within 60 days, leave today again plus 60 days, you should complete the assembly of audit file. But documentation retention period is no shorter than 7 years from the date of audit report, or if later the date of group audit report. Whenever you give the audit report, you should complete the audit file within 60 days. The moment you complete the audit report, from that audit report date, you should preserve that for 7 years. Or later, if you are auditing a subsidiary company, your report will be considered by the holding company auditor. Consider you give the audit report on 10th of May, holding company auditor gave audit report on 10th of July. So you should count 7 years from 10th of July, not from 10th of April, June. That's what you have to consider. This is an MCQ point. 7 years, because in many places in law we discussed it is 8 years, it is now here it is 7 years. If 2 or more different reports are issued for the same subject matter, then time limit should be considered for each report as if for a separate engagements. Again, confidentiality, safe custody, integrity, accessibility and retrievability of documentation should be compulsorily maintained. What is the ownership of the documentation, audit documentation? It is entirely the auditor. If he wants, he can give some extracts or portion to some party and the request made by the party to the auditor. but there is no mandatory that you should compulsorily give the audit working papers to the anybody. Even the client also does not have anything. Unless otherwise specified by law or regulation, documentation is a property of the firm or auditor. In SA 220, we will discuss it as auditor. Firm may, at its discretion, make extracts from documentation available to the clients, provided such disclosures does not undermine validity of the work performed. Undermine means what? Reduce. Or in case of assurance engagements, independence of the firm or its personnel is not being reduced, then only you can share that with the any party. Then lastly, it is monitoring. Everything whenever you're performing, whether it is being properly implemented or not, you should compulsorily keep on monitoring. So an effective system of quality control includes a monitoring process designed to provide the firm with reasonable assurance that it is policies and procedures relating to the system of quality control are relevant, adequate and operating effectively. You started implemented one policy maybe in 2010, but the policy is now outdated. You should keep on continuously monitor that whether it is relevant or not now. If it is relevant, continue it. If it is not relevant, replace it with something else. Remove that. Sir, how do I know that whether it is relevant or not? Based on the monitoring part. If you don't monitor, you will not come to know. That is what the important part. What factors we have to consider? Deciding whether quality control systems of firm has been appropriately designed and effectively implemented. What is appropriately designed? Depending on your firm size, personnel, experts, that you should design it. Examining whether new developments in PRL requirements are reflected in quality control systems. Conducting monitoring by assessing responsibilities of monitoring process of partner or other persons with sufficient and appropriate experience and authority in the firm. Dealing with complaints and allegations against the firm or any employees of the non-compliance with professional standards by person with or outside outside the firm. That means if somebody is trying to enter into any collusion with the client and all those things, how do you deal it with in the firm? The appropriate remedies action against personnel who did not conform to quality control systems of this thing. That means somebody told you should not buy any shares in the company for the purpose of becoming an auditor, but without telling you, they purchase some shares in the company. Then that is how do you give the remedy for all those things? That also has to be checked. This is for SQC 1. Please have a look into this. So now let's begin with SA 220. SA 220 is talking about quality control for an audit, not of the firm, only for the audit engagement. SA related, assurance related engagements, whatever it is there, only for that SA 220 is applicable. So here also same 6 elements of these things are there. If you look at this thing, this is at the engagement level. What is engagement level? Engagement means audit engagement level. So first one is again leadership responsibility. Leadership responsibility of an engagement partner is to take responsibility for overall quality on each audit engagement. He should take the quality with respect to engagement, and actions of engagement partner shall emphasize, mainly he should emphasize, he should give importance to the fact that quality is essential in performing audit engagement. Similar things only there we told consideration should not overtake the quality. Here we are telling for every engagement quality is first important. Then the importance of audit quality are performing work that complies with professional, legal, regulatory and legal requirements. PLR requirements has to be there. Complying with the firm's quality control system policies and procedures. The engagement team ability to raise the concerns without the fear of reprisal, that means punishment. If somebody comes and tells that, sir, this is wrong, who the hell are you to tell me? You are still article, I am already, no, that fear should not be there. Issuing audit report that are appropriate in the circumstances. What is appropriate in the circumstances? You audited the thing, you felt materiality is there, pervasiveness is not there, something based on that, whether qualified, adverse or disclaimer or unqualified, you decide what is to be there. With respect to ethical requirements, similar thing only. Always engagement partners' responsibility is he should identify threats to independence of audit engagement that safeguards may not be able to eliminate or reduce to an acceptably low level. It is a duty of the engagement partner to identify a threat. Reporting by the engagement partner to the relevant persons within the firm to determine appropriate action, which may include eliminating the activity or interest that create a threat. For example, as an engagement partner, you found out that your relative is working in the company or something like that in a top position, then you better go and tell to the firm so that firm will replace you as an engagement partner and put somebody else as an engagement partner at least. So you should try to take such action with respect to engagement partner ethical responsibility. Then again, acceptance and continuance of client relationships. The firm should obtain information is as it is considered necessary before accepting the engagement with a new client when deciding whether to continue an existing engagement. That means for there are three types of work it can be there. New client for the new work, existing clients for the existing work, existing client for the new work. So existing client for the new work is continuance of relationship. Existing clients for the existing work and new clients for the new work, that is acceptance of work. And when considering acceptance of new engagement within an existing client, information that includes what? You should always consider integrity of the principal owners. Are there any cases pending against him? Are they really honest? Are they really straightforward? Competence of engagement team. Do you really have everything with respect to deliver that services, give the quality services to the client? Again, considerations necessary capabilities including the time and resources. Similar thing in SQC1 also. Compliance with the relevant ethical requirements. What is relevant ethical requirements? Independence, professional, fundamental principles, etc. Significant matters arisen during current or previous audit engagement. That means last year only you also did the audit, then you found out some 10 matters, whether those matters, whenever you are planning current year audit or acceptance of contents of these things, whether those 10 matters are corrected or not. Are they really corrected by the management? Are they really having the intention of correction? All those things. Then assignment of engagement team, it is called as human resource in case of SQC1. SQC1 is called as human resource, here it is engagement team. So it should be ensured by the engagement partner that engagement team and any audit experts who are not part of the engagement team collectively have the appropriate competence and capability to perform the engagement in accordance with professional standards and regulatory and legal requirements, PLR requirements. And engagement performance and EQC are also there here. Similar concept. You should perform, every engagement partner has a responsibility for directing, supervision and performance of the audit engagement, etc., etc. The similar way, audit of every listed company has to come, auditor of every listed company has to appoint EQCR, and the EQCR should always review the work performed and the opinion reached, conclusions reached, significant judgment made by the auditor. Then if there is any difference of opinion, they should first clear it, then only audit report has to be given. If there is any difference of opinion can't be cleared between EQCR and the engagement partner EP, then go for based on firm's policies. They may ask for to consult to third parties, all those things. That is for EQCR. The similar thing what we discussed in SQC1, 90% similar is there. Then comes monitoring part, last part. The best system, effective system of quality controls includes a monitoring process designed to provide the firm with reasonable assurance that its policies and procedures relating to the system of quality control are relevant, adequate, and operating effectively. Whatever we implemented, are they operating effectively or not? Are they relevant in the situation or not? The engagement partner shall consider the results of the firm's monitoring process as evidenced in the latest information circulated by the firm. Along with that, engagement partner should document conclusions and compliance with independence requirements. Same things what we discussed there. Issues in compliance with ethical requirements and how they are being resolved. Conclusions regarding the acceptance and continuance of client relationship, what we discussed there. Again, integrity, all those things, competence, time, resources. Nature and scope of consultations undertaken during the course of audit. And again, everything whatever you do, you should document that so that you can protect your interest in the future point of time. That is what SA 220 entirely. If you remember SQC1, SA 220, see if you look at SQC1, SQC1 is applicable for audit, review, related service and other than assurance services also, projection and all those things. One of the part of this SQC1 is audit, that is engagement. So SA 220 is part of SQC1. SQC1 is a broader concept out of which SA 220 has been carved out of it and give it as a separate standard. So now we'll begin with 560, SA 560, subsequent events. Sir, what is this subsequent events? Subsequent event means any events which are occurred after the balance sheet date. After the balance sheet date is called as subsequent events. But for the purpose of discussion, we will divide the subsequent events into three categories. Subsequent event into three categories. Consider This is the financial year end. This is, or I'll call it as balance sheet date. This is the balance sheet date. Now, from the balance sheet date, before the audit report is given, for the audit report date, then we call it as subsequent event 1. This is one category of events. No, sir, I completed the audit. I already prepared the audit report. I already gave that audit report to the company also. Audit report given to the company. This is called as subsequent event 2. If there is any event which has come to known about the situations. Third one is, no, sir, audit report already given to the company. Company also already issued to the public. Public means users of the financial statement. That is called as subsequent event 3. One is balance sheet date to audit report date. From audit report date till the audit report is given to the company. From that audit report given to the company, it is issued to the public. These are the 3 subsequent events. Here, if you look at the definition, SA 560, they tell that events occurring between the date of financial statements and the date of auditor's report. Events occurring date of financial statement, that is 31st March, and till the date of auditor's report. Consider is giving audit report on May 20th. So 31st April 1 to May 20th, those events, and the facts that became known to the auditor after the date of audit report. That means what? See, after I gave the audit report, are the new events occurring? No, events are already occurred, but I came to know at a later point of time. But here also in SC1, events are already occurred, but I came to know in a prior period of time only before I give the audit report. That is why we call it as events occurring between the date of financial statements and auditor's report date. That will be automatically considered in audit report because it is not issued yet. And after issuing the audit report, if you come to know any facts to your auditor, then how do you deal it in your audit report? That is what 2 things which are being discussed. So till this part, this is SC1, and this part is SC2 and 3, subsequent event 2 and 3. Now, they tell that any events providing evidence of conditions that existed at the balance sheet date of the financial statements, for example, insurance claim settled, etc. Then conditions existing on the date of financial statements and conditions arising after the financial statements. I think it is AS4 part, not given here. Events providing evidence of conditions that arose after the date of balance sheet. That is dividend declared. That means whenever I tell this events, some events are occurring after the financial statement date, but before the financial statement or on the financial statement date, that event is already present, but occurred after the financial statement date. For example, fire occurred on somebody's godown on 30th of March only, but he became insolvent on 5th of April. That means event is there on financial statement date, and again it came to known or conclusion on that date. Second category is event was not there in the financial statement date, it actually occurred on the after financial statement date only. For example, dividend is declared in the AGM. When I say dividend is declared in the AGM is conducted maybe after 31st of March only, because you should prepare the financial statements, give the notice, call for the general meeting, then you should give the dividend in AGM, at the points at AGM. Because of which it is the event that has occurred after the balance sheet date only. Now, what are the objectives of auditor? Objectives of the auditor is to obtain the sufficient and appropriate audit evidence about whether subsequent events that require adjustment or disclosures in the financial statements are appropriately reflected in the financial statements or not. That we have to see. I am not concerned about what happened, what not happened. I am just concerned about whatever happened is being disclosed in the financial statements or not. That is what my postman job is. Take receive from somebody and give it to the users of the financial statements in a transparent manner. And whenever you find out some matters, you should respond appropriately to the facts that became known to the auditor after the date of audit report, that if they would have come to the knowledge of the auditor might have amended the audit report. That means now he has issued the audit report as unmodified, and after issuing the audit report he came across some matters. If those matters has already come to know the auditor before issue the audit report, he might have changed the audit report and gave the qualified opinion. Those matters, how do you respond appropriate in the subsequent, and that is what it is being discussed here. First one is subsequent events. What is subsequent event? This is between financial statements date, that is balance sheet date, and audit report date. Financial statement date and audit report date. Now, whenever you find something, you inquire the management whether any subsequent events have occurred that affect the financial statements or not. You are going and inquiring, sir, you tell me, are there any events that are going to affect the financial statements which are occurred after 31st March? Because anyway, all the events which are occurred up to 31st March already entered in the financial statements. But after 31st March, I'm asking you, are there any events? Obtain the understanding of management procedures to ensure that all the subsequent events are identified. Ensure that what procedure the company is following or management is following to identify the events that are being there. Again, read the minutes of meeting of owners, management and TCWG held after the date of financial statements, because they'll take the decisions and all the decisions are recorded in the minutes only. You read the minutes and you will understand what are the types of decisions have been taken, or are there any events after the balance sheet date. Read the entity's latest subsequent interim financial statements, if there are anything available, maybe first quarter, second quarter if possible. Request the management and TCWG to provide a written representation that all the subsequent events have been adjusted or disclosed in the financial statements and nothing has been left it out. This is actually SC1. What is SC1 is mainly talking about, see, if you came across, I'm as auditor telling to the company and management, if you come across any events which are what is come to light after financial statements date before I issue the audit report, you try to adjust in the balance sheet and P&L wherever it is required in the financial statements. If you have adjusted, and how did you find out the subsequent events? Tell me the what is this procedure, or tell me the system, what system you have. If yes, everything, I'll check everything is correct, then I'll issue the audit report considering all the subsequent events. If they're adjustable, I'll check it whether it is adjustable or not as per AS4. If it is non-adjustable, then I'll consider it as next year financial statements items. That is SC1. Main thing which they test in the examination is SC2 or SC3. This is from examination point of view. 5 marks, they immediately test it, easily test it. Facts known after report date, audit report date, but before it is issued, before financial statements are issued. When I say financial statements are issued, company will issue financial statements to shareholders. Before company issues that means audit report is completed, I gave the audit report, one category, or audit is completed, I did not give the audit report, that is still with me only, but audit is already completed. But before the statements are issued to the public. Whenever you find out some events with respect to those things, discuss with the management how they are going and dealing with those matters. So this is what I recently found out. I completed my audit. How you want to deal with this item? You check whatever the matter you found out after the final audit report is issued. Is the financial statements need amendment? That means are they adjustable events so that they need adjustment in the last year financial statements? You check it. And if so, inquire the management how they intend to address the matters in the financial statements. You ask it, sir, I feel this is adjustable event. How do you do it? If the management tells that, okay, sir, we will change the financial statements, amend it and give the new financial statement, that is very, very happy. You tear off the old report, conduct one more some alternative procedure, check wherever the effect is possible there, whether it is correctly adjusted or not, then issue the new audit report. So then if they agree to amend, if the management amends, that means whatever I tell, sir, this is requiring amendment, you have to do the amendment, management amends. Then carry out the audit procedures on the amendment, extend the procedures to the date of new audit report, and provide a new audit report on the amended financial statements. When I say new audit report, you give the first audit report on 31st of May. Later some events has come across. So you completed that new additional audit procedures on 15th June. So new audit report should be 15th June but not 31st May. Because some events has come to know after 31st May. So legal and regulatory or financial reporting framework allows the restrictions. That means auditor may restrict procedures to amendment only. Then auditor shall either amend the report to include an additional date restricted to amendment. That means if the law does not allow you to amend the audit report, then you add one more date to the audit report and tell that these are the events extra identified and added in the audit report. Original audit report should be there. Again you amend the audit report and put one more amendment date here. If you provide a new or amended audit report with an emphasis of matter other matter paragraph, noting that restriction. I have a restriction because of which I could not issue a new audit report. So this is why I have amended it. But second category is what? If the management does not amend the financial statements. In that case, if the report is not yet issued by the auditor to the company, then you modify the opinion and then provide the report. You prepare the audit report, but you did not give it to the company. Then it is with you only, na? Tear it, prepare new report, give the amended report only. Or if the report is already issued to the company, not to the shareholders, then tell the management at TCWG, don't issue that audit report or financial statements to the public, because I don't feel that is correct. If it is issued without the amendment, that means even you tell they don't amend it directly, give it to issue to the public, then you take appropriate action to prevent the reliance on that report. People should not believe on that reports. You should take such action. But here there is one language. I think it is missing here. What is that action language is? Whenever SE2 and SE3 I am talking, whenever the facts came to knowledge of the auditor after audit report but before financial statements are issued, as a auditor, you don't have any responsibility with respect to all the events after the audit report date. But if those events has come to your knowledge before giving the audit report, you might have modified the opinion. Then auditor should consider the following procedures. These things has to be done. If you look at the main material, we have that paragraph initially. Auditor does not have any responsibility for the events which has occurred after the audit report date. But however, if the auditor has come across those events before the audit report date, then he might have modified his opinion or amended the opinion. Then he should consider the following procedures has to be done. You should remember that line. Here it is there. Key rule. It is for everything. The auditor has no obligation to perform any audit procedures regarding the financial statements after the date of audit report. However, if the facts come to the light may have caused the auditor to amend the audit report, then auditor must act accordingly. Accordingly means conduct audit procedures. SE2 as well as SE3 is there. What is SE3? SE3 is almost same to SE2 only. But here only one difference is, here financial statements have been already issued to the shareholders or users of the financial statement. Then same thing, discuss the matters with the management. If the management amend the financial statements, inquire how the management intends to address the same. Check that whether financial statements require amendment. If yes, ask the management how they want to deal it. If the management amends, if the management does not amend, same consider. Management amends, carry out the procedures, extend the procedures till the date of new audit report, provide a new audit report or amended financial statement not earlier than the date of approval or amendments, etc. Same thing only is there, nothing change here. This is what SA 560. This is important from examination angle also. Now we'll begin with SA 500, audit evidence. See, as per SA 200, as per SA 700, everywhere we told that the objective of the audit or the objective of auditor is to what? Express an opinion on the financial statements, whether they are free from material misstatement and they prepared as per AFRF or not. But before expression of an opinion, we should get the reasonable assurance that everything is free from MMS and all those things. Sir, how do we get the reasonable assurance with respect to everything? Sir, it is not just by just looking at the financial statements. You should get the evidence with respect to all those things. Sir, what is that evidence? How do you collect the evidence? That is entirely being dealt in two standards. That is SA 500 as well as SA 501. Mainly two standards with respect to audit evidence. So what is audit evidence? Audit evidence means it may be defined as the information used by the auditor in arriving at the conclusions on which the auditor's opinion is based. Whenever you tell that something is unqualified, something is qualified, then on what basis you are telling that is qualified or unqualified or adverse or something else? That base is called as audit evidence. So that includes all the information contained in the accounting records underlying the financial statement. That means financial statements, books of accounts, vouchers, etc., etc. Everything, whatever it is there, based on that only I'll come to a conclusion. And again, some other information. Other information means other than financial statements information. Maybe minutes of the meeting, maybe board meeting minutes or EGM minutes, or maybe resolutions passed at every meeting. So that is other than financial statements part. That is what we keep it as a base. Based on that, I derive a conclusion, come to a reasonable assurance and conclusion. Then I'll give the financial statements audit report. What are the types of audit evidence available? There are either it is a oral evidence. What is oral evidence? You went and spoke to the employees. Employees told, sir, there is some fraud happening, based on which you took action. That means it is an oral evidence. What is the documentary evidence? Whenever you are auditing a financial statements in a documented form, you find out some mistakes. Instead of treating it as instead of doing the double entry system, they did a single entry system. In that case, there is a documentary. What is visual evidence? You are trying to see that. See, SA 501 tells that whenever inventory part is there, in that inventory should be verified at a reasonable intervals. In that case, as an auditor should attend the physical inventory counting and should observe that how the counting is happening, 1, 2, 3, 4, 5, or 1, 2, 5, 9, 25, 35. So just on a visual records also trying to get some evidence whether they are genuine management or not, whether they are or this honesting. Depending on the sources, there are two sources. One is internal source, second one is external source. Sir, what is this internal source? What is this external source? Any evidence which is obtained from the client's premises or client's available resources only. That is what we call it as internal evidence. What is external? Other than clients is called as external thing. For example, some debtors, some creditors, some bankers, some government authorities, etc., etc. We are getting the evidence. So evidence which originates means what? Starts within the organization being audited is called as internal evidence. Evidence that originates outside the client's organization is called as external audit evidence. Mainly this external is discussed under 505, external confirmation with respect to auditor. Now this is important, relevance and reliability. 5 marks or 4 marks they can ask. Relevance and reliability. Sir, what is this relevance and reliability? Whenever you get the audit evidence, getting the evidence itself is not sufficient. Getting the relevant and reliable evidence is very, very important. Sir, what is getting the relevance of evidence? What is relevant evidence? For example, I am doing the audit of sales part. Now they are giving the evidence with respect to purchase part. Is it relevant to the audit which is being performed? No, that is not right. And whenever you give they give the audit evidence, they are giving the audit evidence with respect to I am doing the sales of 2000, sorry, I am verifying the electricity bill, total electricity bill of 25-26, but they are giving 2024-25 electricity bill vouchers, receipts. Is it relevant? Can we rely on those documents? No, definitely not. Or some documents I am asking, sir, I want some confirmation from third parties. These are the list of parties. You please tell that I will communicate with them. The company is trying to tell that no, sir, I will talk to them. I will get the evidence by myself and I will give it to you. Can I rely on that evidence? No, I can't rely on that because that might be tampered while that is coming from the company route. So whether it is relevant means is it relating to the current period or not? Can it be reliable or not? Can it be reliable means is it a genuine document or any made up document? That also has to be checked mainly. So relevance means it deals with logical connection with proper audit procedures and assertions under considerations. Inspection of documents related to the collection of receivables after period end may provide audit evidence regarding the existence and valuation, but not necessarily cut off. Is it relevant or not? What is reliability? Can you trust on that or not? Information to be used as audit evidence should be reliable. That means whenever you recognize that exceptions that may exist, that following generalizations about the reliability of audit evidence may be useful. That means this is important. There are 4 generalizations they have given. Any audit evidence you obtain from independent sources are more reliable than the dependent sources. That means an outsider giving an evidence that is more trustworthy rather than an insider giving the information. Again, whenever the internal controls which are implemented by the company, when they are operating effectively, then any evidence I get from those things are more reliable compared to the situation where internal controls are not working properly. So reliability of audit evidence is increased when the related controls imposed by the entity are effective. If they are not effective, they are not reliable also. For example, there is an internal control stating that the moment I sales, cash to sales, I made an entry. Cash went to cash book, but sales went to purchase book. That means P&L is totally mismatched. That means internal control is not working effectively. When that is not working effectively, how can I trust P&L? How can I trust sales and purchase book? That is not going to happen. They are not reliable. I can't trust them. It depends on reliability of controls. When the controls are working, then everything can be reliable. Then again, audit evidence obtained directly by the auditor compared to indirectly through the client or somebody else is more reliable. If I directly talk to, for example, there is a girlfriend and boyfriend and they fought for some reason. Now there is one friend in between. That is a boy's friend. He is also having crush on that girl. Now the boy, the friend is asking, hey Macha, you talk to her, is she really upset on me or all those things? He'll definitely tell that thing. You can't rely on his words. You directly go and talk to the girl. Na? If he tells that she is not interested in you, then you decide that yes, it is genuine information, reliable information. When it is coming from the third party, it might have been tampered. You don't rely on those information. You try to get information from yourself. that might not be good for your audit. Audit also life also, anything is same. So audit evidence obtained directly by the auditor is more liable than the audit evidence obtained indirectly or by inference. Inference means somebody is there in between. Inference. Then again, audit evidence in documentary form, whether paper or electronic or other medium, is more liable than audit evidence obtained orally, because orally people are tend to change as per their needs. When some situation comes against their favor, then definitely they'll change. They're like relatives. Sir, ನಾವು ತಂಗೇಳಿಲ್ಲ ಅಂತ ಹೇಳಿ. Relatives are always like what? ಹಿಂಗಿದ್ದಂಗೆ ಆಗ್ಬಿಡ್ತಾರೆ plate. That is why you should always keep it in a written format. Everything is better. Then audit evidence obtained as original document is more liable than the audit evidence obtained as a photocopies. Original document is more better than the Xerox copies, because Xerox copies can be edited, modified, anything can be done. That is why I try to go for these things. They might ask what are the items which has to be considered with respect to more liability. You should write these 5 points. What are those 5 points? Independent sources is more liable rather than dependent. Then evidence obtained when the controls are effective, that is more liable. Then evidence obtained directly by the auditor, that is also more liable. Then evidence obtained in documentary form, that is more liable. Then evidence obtained in the original documents rather than Xerox copies, that is more liable. There are 5 points. You should remember that. You can even summarize that also. 5 points, important. Then, how do you do the audit procedures whenever you want to get the evidence? Audit procedures is generally done by 2 ways. Well, there are 2 things. One is RAP, risk assessment procedures. Then further audit procedures, under which again we have test of controls. So not test of controls, no, not correct. And substantive analytical procedures. That's okay. There I think something is missing here. No, it is correct only. Risk assessment procedures. What is risk assessment procedure? Procedure which is obtained by understanding of the entity and its environment. SA 315 mainly talks about this part. Understanding the entity and its environment with respect to that part. What are test of controls? You are testing the controls itself, not the transactions, but the system of the controls. When required by SA or when the auditor has chosen to do it. So, what is substantive procedures? It includes test of details and substantive analytical procedures. So, either it is test of controls. Risk assessment procedure has 2 things. Either you do test of controls or you do substantive procedure. This substantive procedures can be test of details or it can be substantive analytical procedures. So, how do you get the evidence? This is important from examination point of view. They will definitely ask for 5 marks. So, what is it? Methods of obtaining an audit evidence. Audit evidence can be obtained in 7 methods. Audit evidence can be obtained in 7 methods. So, what are those 7 methods of obtaining an audit evidence? One is inspection, observation, external confirmation, recalculation, reperformance, AP and inquiry. Look at the thing. Can we make any mnemonics in this to remember any word kind of things? Did we made anything in that in the regular class? What are the words? I, O, E, R, R, A, I. Can we do anything here? Okay, you check it. We'll check it later. Now it is marathon. Will not waste time on this. So methods of obtaining an audit evidence. Either you can obtain by inspection, or obtain by evidence observation, or you can obtain by inquiry, or you can obtain by external confirmation, reperformance, recalculation, and last one is analytical procedure. So what is inspection? Inspection is nothing but verification of documents, examining the documents, whatever the documents it is there. For example, I want to know that company is in the balance sheet told that PP, property, plant and document, under which 10 cars they are telling. Now I want to inspect it. Sir, how do I inspect it? Whether the cars are registered in the name of company or not. Just go and inspect the documents, you will understand whether it is in the name of company or not. Inspection means it involves examining the records or documents which provides audit evidence of varying degrees of reliability. What is varying degrees of reliability? Different degree. That means different percentage of reliability you can have it. Then what is observation? Observation means you don't do anything, you just look into the things what are being done by the company, how they are doing it, why they are doing it. So looking at the process or procedure being performed by others, mainly that inventory counting process. You don't need to do the inventory counting, you just go and sit and observe how they are counting the inventory. SA 501, inventory counting. Then external confirmation. What is external confirmation? You don't get any evidence in the company, na? Try to talk to outside people, try to talk to the debtors, try to talk to the bankers, try to talk to the government people, any party where you think that you can get the evidence. In that case, obtaining the direct response, usually written response from an external third party is called as an external confirmation. Then recalculation and reperformance. We will see it later. We will see AP, analytical procedures. What is analytical procedures? Trying to find out the plausible relationship between financial as well as non-financial data. I think I used to give the same example in consider last year 2024 25, consider 100 employees were there, we used to give 10 lakh rupees as salary, 10 lakh rupees as salary. Now employees has come down to 85. Now what should be my answer? It should be less than 10 lakh generally. That means I am comparing financial as well as non-financial. Number of employees are non-financial, 10 lakh rupees is financial. I am trying to find out this answer by understanding the relationship between possible or plausible relationship between financial as well as non-financial data. That is called as analytical procedures. If it is there, then it might be less than 10 lakh, it may be more than 10 lakh. We will see the actual part with later, not now. Then comes recalculation and reperformance. What is recalculation and reperformance? Mainly recalculation goes for checking the arithmetical accuracy of the documents. For example, company calculated the depreciation as 10 lakh rupees. Whether they calculated correctly or not, we don't know it. I want to recalculate. Okay, I take the, mainly I am talking from income tax point of view. In the income tax, there is no SLM method. For PP, that cars, electric items, for motors, everything does a depreciation percentage different, 15%, 20%, 25%, everything. So you check it whether whatever they did it, correct or not. Depreciation charged, arithmetical accuracy part, recalculation, manually or electronically. You can use Excel also, you can use anything also. Records are the client's calculations. Reperformance means whatever the work already performed by company or the auditor, you are again redoing that. It is not just one part of the work, again it is entire work. The auditor's independent execution of procedures or controls that were originally performed as part of the entity's internal control system. You are redoing that again. What is inquiry? Inquiry is nothing but talking to the people. Sir, which people? You can talk to the internal people, you can talk to the external people, you can talk to any people, wherever you feel you necessary that you will get the evidence. Seeking information from knowledgeable person. For knowing whether what decision has been taken in the last board meeting, you don't go and talk to the watchman of the company. Knowledgeable person does not mean that highly qualified. Who is really involved in that matter, that should be concerned, both with respect to financial as well as non-financial, within the entity or maybe outside the entity. You want to know what are the pending litigations in the company. As per SA 501, okay, you go and talk to the external legal counsel. That is up to the you. We can talk internally or externally also. There are 7 methods of obtaining an audit evidence. What are those 7 methods? Inspection. Okay, you can tell it in any form, or you can try to find it these things. First, I'll go for II. Inspection, inquiry, recalculation, reperformance, observation, analytical procedures, and external confirmation. External confirmation. This is how it has to be there. The similar things which we will again discuss in SA 315 also. For the purpose of risk assessment procedure, how do we obtain the risk assessment procedures evidence? There are only 4 methods available there. All the methods are not available. You remember these 7 methods. See, in any audit of any part of audit, you can obtain evidence only by these methods. There are no other methods of obtaining the evidence. Out of which some methods are suitable for some activity, some methods are not suitable for some activity. That also has to be discussed in wherever that comes. This is a 5 marks important question. Then comes audit trail. I think we discussed this audit trail. What is audit trail? Every company should have a system that should be able to record whenever the entry is made, by whom it is made, at what time it is made, what day it is made, and whenever there is a subsequent modification, deletion, addition to the entry, all those details has to be recorded in a time log basis. That is called as audit trail. It is from the origin till the end of transaction, whatever it is being happening, that also has to be entirely recorded. It is even called as edit log. In essay, not essay, in Companies Act we discussed it. This is also important for 5 marks. They'll ask. The audit trail is a documented flow of transaction. What is flow of transaction? Okay, from the date of entry, again sales return, again purchase return, again bad debts, again something. It is entirely the flow of entry. It is used to investigate how a source document was translated into an account entry, and from there it was inserted into the financial statements of the entity. That means the moment you make an entry, cash to sales, how it is going to the sales account, how it is going to the cash account, again how it is going to the P&L account, how it is going to the net profit, everywhere this flow it is being checked. It is used as an audit evidence to establish authenticity as well as integrity of a transaction. If the transaction is altered, the authenticity will be is less compared to. If the transaction is not altered, then authenticity will be more. Authenticity means what? Authentication. Authentication means verification. The thing. Audit trail helps in maintaining the records of the systems and user activity, so that who did what activity can be easily maintained there. It is a step-by-step record by which accounting, trade details, or other financial data can be traced to their sources. That means, okay, if I am seeing an entry, ಇಲ್ಲಿರೋದು ಕಾಣೋದಲ್ಲ, ಇದಕ್ಕಿಂತ ಮೊದಲು ಎಲ್ಲಿಂದ ಸ್ಟಾರ್ಟ್ ಆಗಿದ್ದಾರೆ ಅಲ್ಲಿಗೆ ಟ್ರೇಸ್ ಮಾಡ್ಕೊಂಡು ವಾಪಸ್ ಹೋಗೋದು ಇನ್ವೆಸ್ಟಿಗೇಷನ್ ಡಿಟೆಕ್ಟಿವ್ ಕೈಂಡ್ ಆಫ್ ಥಿಂಗ್ ಇಸ್ ಕಾಲ್ಡ್ as audit trail. Audit trails are used to verify and track many types of transactions, including accounting and financial transactions, mainly accounting and financial transactions only. Audit trails or audit logs or edit logs act as record keepers that document evidence of certain events, procedures, or operations, because their purpose is to reduce the fraud, material errors, and unauthorized usage. See, when people or employees know that there is something which is keeping my activity as a record, then they try to commit lesser fraud or lesser errors, at least on the system. This audit trail helps to enhance the internal controls and data security. Audit trails can fix responsibility, rebuild the events thoroughly, analyzing the problem areas. Audit trail can be also be used as okay. This is okay. That is what in important part. Now, whenever you want to get the audit evidence, how do I get the audit evidence? By verifying all the items, verifying the items. By I'll check sales, I'll check purchases. Based on that only I'll get the evidence. How you select the items for the purpose of testing so that you will get the audit evidence. There are 3 methods of testing. Either you select all the 100%. It is not suitable for all the big companies. It is suitable only for small entities. Or you go for a selecting specific items. Specific items means what? For example, I'll check only transactions of more than 10 lakh rupees. Specific items, maybe 10th date, 20th date, 30th date, and 5th date. I want to check off every month. Specific items. Or you go on audit sampling basis. What is audit sampling? There are multiple types of sampling which we will discuss in 5:30. You can go by any of the method. You just remember 3 things. They may ask an MCQ in this, stating that what is not the method to select the sampling items to get the audit evidence. Selecting 100% items or specific items or sampling part. Then whenever you get some audit evidence, if you have some doubts over the reliability of or inconsistency of the audit evidence, that means you got the audit evidence, no, you feel that no, I feel it is fake, I feel it is tampered already, then how do you do it? So if you get any evidence which is inconsistent with the other evidence, for example, you already have some books of accounts that is telling that debtors is 10 lakh, but you spoke to the debtors, he gave a balance of 15 lakh rupees. That means there is an inconsistency between the two evidences. Then you determine whether modifications or additions to audit procedures are necessary to resolve this matter, and consider the effect if there is anything on the aspects of audit. That means 705. If that is possible, go for 705. Auditor has doubts over reliability of the information to be used as audit evidence. Information to be used as audit evidence. Then also 705 only you should go and check. Which is what? SA 500. Audit evidence. Very important standard. This is also highly A category standard. ICA will definitely drop you in these areas. Please have a look into this 500 later. Then we can continue after the break. And then you also take a screenshot of it, or maybe something you can do it, or you can order the book also. ಜನರೇಷನ್ ವೈಸ್ ನೋಡಿದ್ರೆ ನಮ್ಮ ಅಜ್ಜ ಅಜ್ಜಿ ಕಾಲದಲ್ಲಿ ಮೇ ಬಿ ಅವ್ರೊಂದು 30-40 ವರ್ಷ ಆದ್ಮೇಲೆ ಅವ್ರ ಗಂಡನ ಕಂಟ್ರೋಲಿಗೆ ತಗೋತಿದ್ರು. ಈಗ ನಮ್ಮ ಪಪ್ಪ ಮಮ್ಮಿ ಏಜಲ್ಲಿ ನೋಡಿದ್ರೆ ಮೇ ಬಿ ಒಂದು 15-20 ಇಯರ್ಸಿಗೆ ಬಂದಿದ್ದಾರೆ. ಈಗ ನಮ್ಮ ಜನರೇಷನ್ ನೋಡಿದ್ರೆ ಮೇ ಬಿ ಇಮಿಡಿಯೇಟ್ಲಿ, ಮೇ ಬಿ 2-3 ಇಯರ್ಸ್ ಆರ್ ಮೇ ಬಿ ಇಮಿಡಿಯೇಟ್ಲಿ. ಇನ್ನೊಂದು ಮೇ ಬಿ ನೆಕ್ಸ್ಟ್ ಈಗ ಜೆನ್ಜಿ ಆಲ್ಫಾ ಬೀಟಾ ಎಲ್ಲ ಹೋಗ್ಬಿಟ್ಟು ಅಂದ್ರೆ ಮೇ ಬಿ ಬಿಫೋರ್ ಮ್ಯಾರೇಜ್ ಓನ್ಲಿ ಇಟ್ ಹ್ಯಾಪನ್ಸ್. ಸೊ ಇಟ್ ಈಸ್ ಪ್ರೂವನ್ ಫ್ಯಾಕ್ಟ್, ಅದ್ರಲ್ಲೇನೂ ಡೌಟ್ ಇಲ್ಲ. ಅಲ್ಲ, ನನ್ನ ಫ್ಯಾಮಿಲಿ ನೋಡ್ಕೊಂಡು ನಾ ಹೇಳ್ತಾ ಇದ್ದೀನಿ ಹೌ ಈಸ್ ಇಟ್ ಬೀಂಗ್ ಹೈರಾರ್ಕಿ ಹೆಂಗ್ ಆಗ್ತಾ ಇದೆ ಅಂತೇಳಿ. ಸ್ಟಾರ್ಟಿಂಗ್ ಎಲ್ಲಾನು ಕಂಟ್ರೋಲ್ ನಮ್ಮ ಹತ್ರ ಇದ್ದಾನೆ ಅಂತಾನೆ ಅನ್ಸಿರ್ತೈತೆ, ಬಟ್ ಡಿಸಿಷನ್ ಮೇಕರ್ಸ್ ಬೇರೆನೇ ಇರ್ತಾರೆ. ಸೊ ಅದನ್ನೇ ಹೇಳ್ತಾರೆ, ಇಟ್ ಈಸ್ ಜಸ್ಟ್ ಎ ಮ್ಯಾಟರ್ ಆಫ್ ಟೈಮ್. ಇಟ್ ಈಸ್ ನಾಟ್ ಡಿನಯಬಲ್, ಇಟ್ ಈಸ್ ಜಸ್ಟ್ ಎ ಮ್ಯಾಟರ್ ಆಫ್ ಟೈಮ್. It depends on how strong the opposite party is. If the opposite party is like rebel, all those things, then okay, ಇವಂಗ ಏನಾದ್ರು ಹೇಳಿದಾಗ ಏನೋ ಅಪೋಸಿಟ್ ತಗೊಂಡು ರೆಬಲ್ ಆಗಿ ಮತ್ತೆ ನಮ್ಗೆ ಇದು ಮಾಡ್ತಾನೆ ಅಂತೇಳಿ ಯು ಟ್ರೈ ಟು, ಇಟ್ ಇಸ್ ಲೈಕ್ ಸ್ಲೋ ಪಾಯ್ಸನಿಂಗ್. ಒಮ್ಮೆ ಪಾಯ್ಸನ್ ಕೊಟ್ಬಿಟ್ರೆ ಅವ್ರು ತಗೊಳಕ್ಕಾಗಲ್ಲ, ನಮ್ಮೆಲ್ಲ ಮಾಡ್ಬಿಡ್ತಾನೆ ಅಂತೇಳಿ ಸ್ಲೋಲಿ 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 ಇದು ಮಾಡಿ ವಾಪಸ್ ಬರುತ್ತೆ. ಸೊ ನಾವು ವಿ ವಿಲ್ ಬಿಗಿನ್ ವಿತ್ 501 audit evidence, specific consideration for selected items. So as this SA 501 has selected 3 items, and there are some specific consideration with respect to those 3 items. First is with respect to inventory part, second one is with respect to litigations and claims, and third one is with respect to segment information. When I say this inventory, they are not bothered about what is the value of inventory. They are bothered about only 2 things. One is existence and condition of inventory. When I say claims and litigation, they are not bothered about how many claims are there in the company, whether they disclosed entirely completeness of litigations and claims are being done in the financial statements or not. That has to be seen here. Then segment information, mainly presentation and disclosure of segment information. Existence and conditions of inventory, completeness of litigations and claims, and presentation and disclosure of segment information. See, what is important from examination point of view is definitely if they test 90% they test this thing only, inventory verification of inventory, physical inventory, inventory related part. But there is a possibility segment information is rarely tested or not tested only. You can ignore that. And when it comes to litigations and claims, that is also having a chance, 10% chance of being tested in the examination. First we will discuss those 2 things, then we'll come back to the main part. When it comes to litigations, point number 5, litigations, as an auditor you should inquire the management, including the in-house counsel. If the management or company has an internal legal department, you talk to them also for that are there any or this litigations and claims which are not recorded is still there, and you review the minutes of TCWG. Again, correspondence between the entity and its external legal counsel. Correspondence means communication between entity and its external legal counsel. If you want, you can look at the minutes also. Minutes, what is minutes? It is a summarized version of everything which is there. So if they have taken any decision with respect to litigations and claims, look at the minutes, then try to talk to the external legal counsel also. After that, if you want to still know that are there any litigations and claims, you can go and see that legal expense account. What is legal expense account? See, whenever they make a payment to external legal counsel, unnecessarily extra, then I consider that okay, something is going on, that is why they are making the payment, maybe to defend some case or to argue some case. That is what it is happening. So based on that also you can identify any claims or litigations which are not disclosed in the financial statements. Now as an auditor, whenever you want to communicate with external legal counsel, can you communicate? Yes, communication is possible, provided, but whenever you want to communicate, first talk to the management. That's, see, I want to have a communication with external legal counsel, please arrange a meeting or something like that. So initially you try to send one general type of communication part, general type of questionnaire thing. If they don't reply to the general questionnaire, then write a specific letter or specific requirement stating that this is what I want, you please reply to it. If you really wanted to meet, then talk to the management. You can go and meet the external legal counsel, but one person from the management has to be physically present with you whenever you are meeting with the external legal counsel. So auditor should assess risk of material misstatement regarding litigations or claims, whichever it is there. Then how do he get it? Seek the direct communication with entities external legal counsel. Law or regulation prohibits the direct communication. That means they tell that, sir, court told that you should not communicate with any other legal counsel or something like that. Then perform alternate procedures. What alternate procedure? It is up to your professional judgment. Based on your judgment, you go and do it. Management refuses to permission to communicate or meet with the legal counsel. Management only not permitting it. Then Auditor unable to obtain sufficient appropriate audit evidence, then go for 705. If you don't get the evidence, no, there might be materiality also, pervasive also, go for a modification. Modification means either qualify or disclaimer of opinion. Adverse will not come because it is refusing to communicate to the extra legal counsel. If you don't communicate, you don't get the evidence. That means non-availability of evidence, either qualified or disclaimer of opinion. When the meeting with the counsel is required, the matter is very significant and that is having a significant risk, and or the matter is complex, you can't talk over the phone, or that can't be explained over a paper or something like that, or there is a disagreement between management and entities external legal counsel. Management is telling no sir, external legal counsel is telling yes sir, then okay, let me go and meet personally what is happening between them. So whenever you want to do it, you should do it in a management representatives attendance should be there, one person should be there. This can be asked as an MCQ point. Management representatives, this thing. That is what with respect to litigations and claims. When it comes to segment information, nothing great. You refer to the information. See, segment information, they are talking about mainly presentation and disclosure of segment information. When they should disclose and present segment information, if it satisfies A17 part. So refers to the information about different types of products and goods, services of an enterprise and its operations in a different geographical areas. So either as per A17 there are two types of segments. One is geographical segment or business segment. What is geographical segment? When they operate in a two different geographical locations where risk and rewards are totally different, that is called as geographical segments. Business segment is different goods or services where the risk and rewards are totally different with respect to goods and services. That is also this thing. So you should try to obtain understanding of the methods used by the management in determining the segment information. Sir, how did you find out this is a reportable segment, this is not a reportable segment? Sir, because we applied a 10% criteria, 10% of turnover, 10% of assets, 10% of profit. Based on that, we are computed that. Evaluate whether such methods are likely to result in disclosure as per AFRF or not. Applicable financial reporting framework, that is A17. As per A17, once you apply that method at 10%, will they result in disclosure in financial statements or not? If yes, that has to be done. Again, you test application of the method. What is test application of method? They told sir ABC are reportable, DEF is not reportable. You do the 10% test it whether they are reportable or not reportable. Based on that to come to a conclusion. And responsibility in relation to financial statements taken as a whole. Not required to perform alternative procedures, necessary to express an opinion on segment information on standalone basis. Not so important. Coming back to important area, that is inventory part. When it say inventory, the main part which has to be discussed is physical verification. See, with respect to inventory, there are multiple places. 501 is also talking about inventory. CARO 2020 class 2 also talking about physical inventory. Register has to be maintained. Discrepancy of 10% or more has to be dealt in books of accounts. The similar way here also there. So if the inventory is material to the financial statements, as auditor, you should attend the physical inventory count to obtain sufficient and appropriate audit evidence. You tell me, based on the 500, when you attend the physical inventory counting, what method of audit evidence he will try to perform there? We have 7 methods of getting audit evidence. What method he will use it when he attends physical inventory counting? What do you feel? No, your answer may be right or wrong, but what do you feel in the first instance you should tell that? Inventory counting another no. We discussed 5 methods: observation, inspection, recalculation, report. Out of 7 methods, when the auditor goes for physical inventory counting, what method he will apply to get the sufficient and appropriate audit evidence? Inspection, observation. Okay, observation, because he should just observe. He does not need to do anything regarding existence and conditions of the inventory. So how do he get it? The procedure is management's instructions and procedures for inventory counting. How the management is telling, you go and count inventory in the presence of auditor or something else, and you observe the performance of the count also, how they are counting. 1 2 3 4 5 6 orderly happening. Okay, they are counting 1 2 9 10 13 15 25 150 directly. Then what nonsense? Then you should even require go and inspect also. What do you mean by go and inspect? They're telling sir, these are the boxes which are there. In the box, within the boxes there are 10 small these are there, items are there. For example, you know that one bundle of notes. If you go to currency chest verification, you have an option. Currency chest means where money is being kept. They tell that one bundle has 100 notes. That 100 notes bundle, there will be 10 bundles which will make one big bundle. So if they start counting, that is being sealed 1, 2, 3, 4, 5. That means there are thousand notes continuously are there in every bundle. That is how it has to be there. If you want to inspect, okay, open one bundle, count everything in a machine or something. If you feel satisfied, then you go ahead. Again, you can perform the test counts also. That is what we are discussing. Conduct the test counts during the attendance. They already told, sir, this box has some 100 units. Okay, give me that box. Let me verify. Verified boxes. Again, whenever you go for physical verification of inventory, you should first plan the physical verification of inventory. You can't directly tell that, okay, come, let's go, Macha, today we will do the physical verification. Not possible. So, stages of completion of work in progress you should consider. What is stages of work in progress? When the moment you tell inventory, it is a raw material part. The raw material may be in the production process also. The raw material may be completed also. You should even consider that work in progress also. Timing of physical inventory counting. What should be the timing of physical inventory counting generally? The timing of physical inventory counting should be as near as possible to the balance sheet date. Generally on 31st March. If that is not happening, then either before or after you do it and perform some alternative procedures between that gap. For example, 5th April you did, then 31st March again you do it at a later point of time. 31st March, 5th April, do the reconciliation, get the exact figures. The nature of internal controls related to inventory. How the controls are implemented in the company. So controls are like nobody can steal the inventory because there are CCTV camera, there are security also, there is some compound also, electric fencing is also there. That is entirely secured. If the internal controls are working properly, then I can believe on that whatever there it is there in that. And what is ROMM related to inventory? You remember that what is this supermarket example? I gave that even though they have camera, every people we try to have like eat there only, then we'll throw the chocolate cover. You remember that Lulu Mall juice example I gave? I think audit was, when did we complete the audit? Latest subject is audit, right? First we completed law, then we completed audit. Locations at which inventory is held, sir, there is, entirely is there in one godown? No, sir, it is there in 10 countries, it is there in 100 countries, every location. Where the entity maintains perpetual, whether the inventory maintains perpetual inventory system or not, continuous and recurring basis without stopping anywhere. Again, whether proper instructions have been issued for physical inventory counting or not. What is proper instructions? You have to count in this way only. You should count first this one, again second one, third one, fourth one. Some instructions has to be proper. Then only you should. All these things has to be discussed in planning stage only. Decided. Then physical verification counting. It is a special situation. Now 501 is gone, completed with respect to existence and condition. Now special situations are like if physical verification happens on the date other than the date of financial statements. That means either on 25th of March or on 5th of April, on the other than financial statements date, you should perform some alternative procedures to obtain evidence about whether changes in the inventory between the count date and financial statement date are properly recorded. For example, you went on 25th of March. So 25th of March, whatever you purchased it, add it again, whatever you sold it up to 31st March, you deduct it again, wastage, everything you do it, reconciliation, then you get 31st March. Unable to attend the physical inventory counting because of some unforeseen circumstances. In that case, make or observe some physical count on an alternative date. Alternative date means you talk to the management and tell that, okay, we will do it on some other procedure and perform some alternative procedures on inventory counting transactions. Because you are doing on some other date other than balance sheet date, you should do it some alternative procedures. If it is impracticable to attend, in that case, perform alternative procedures to obtain sufficient appropriate audit evidence. Not possible to obtain this thing, then go for 705. Then inventory at third party go down. That means the company is telling, no sir, our inventory is entirely the third party. That means it is in some other place, it is not with us. Then you can directly call them, get the external confirmation, send a mail. That 505 is also there. If not, you can appoint somebody. You can directly go to the third party warehouse and get it done by physical verification. If you can't do it, then go for appointing somebody else to go and attend the physical inventory counting of third party. Request the confirmation from third party, perform inspection and other alternative procedures as appropriate. This is 505 alternative process, etc. This is with respect to perform inspection or other alternative procedures are like appoint another person to verify, etc. This is about 501. You can have a look into these exam tips. Now we will begin with 505, external confirmation. So what is this external confirmation? Whenever auditor is in a method of getting the audit evidence for the purpose of expression of an opinion, if he feels necessary to communicate to any third party, he has the option to go and communicate to third party, but not necessarily by physical. He can get confirmation externally, the party who are independent to the entity, maybe third parties who are connected to the company but independent, maybe like creditors, debtors, bankers, government, any authority. So 505 is made, 505 external confirmation is a method of getting the audit evidence, because if you look at audit evidence 500, in that one of the method of getting the evidence is external confirmation. That is what we are discussing now. Sir, what type of confirmation we can get? What is confirmation first? Confirmation is like whenever I tell the other party stating that, sir, this is what it is there in the books of accounts. Are you really agree with this number? Or I'm trying to ask him that, sir, tell me what is the balance which is you are supposed to give it to the company. So anyway, I can go it. When I ask a question to the other party will answer in two ways. There are two types of answer as per 505. First one is either we call it as PCR, positive confirmation request can be there, or it can be NCR, negative confirmation request. So what is positive confirmation request? Positive confirmation request is something where the opposite party responds to the auditor, irrespective whether he agrees or disagrees. I am telling, sir, in the books of accounts, the debtors it shows as 10 lakh rupees. You please give me the confirmation. If he tells that, yes, sir, 10 lakh rupees, that is also positive confirmation request. Second one, if he tells that, no, sir, it is only 8 lakh rupees, that is also positive confirmation request. PCR simply means that replying to the auditor. It is not just that non-replying thing. What is negative confirmation request? Negative confirmation request are those things where the auditor tells that, okay, I am sending you this request. If you reply to me only if you disagree. In the books of accounts, it is showing it as 10 lakhs. If it is 10 lakhs, don't give reply only. I consider that as you agreed for that 10 lakh. Only if you disagree that, then you tell that, no, sir, it is not 10, it is 9, it is 8, it is 15, something you tell it later. That is what we call it as negative confirmation request, NCR. There is one more thing called as non-response. Non-response is actually not part of request. Only there are two types of request, PCR. To get the reply, whether it may be a positive reply or negative reply, doesn't matter, he should reply it. When it comes to negative confirmation request, then the opposite party will reply to the auditor only if we disagree with that. Then non-response is also there. Non-response means the other party is not responding only. What is external confirmation? Okay, there is one more important point. Whenever an auditor decides to communicate to an outsider for the purpose of getting the information, there is some procedure to communicate. Just because you want to communicate to some ex party, you directly can't go make a call to him or write a mail to him. There is a procedure. SA 505 is talking about, you should first talk to the company that you want to communicate to so and so party. Once they are okay with it, company will send the request letter to the third party stating that you please directly reply to the auditor only. That is what they tell. Once the auditor receives that reply from the third party, we can consider whether it is reliable or not reliable, trust it or not trust it, it is up to him. But the process of auditor which he has to do is, first of all, he should select the party to whom he has to communicate. Once he selected the party, what are the matters that he wanted to communicate? That also has to be selected. Once it is there, then what is the third step? First one is determining the matters to be communicated. Second one is selecting the party to be communicated. Third one is matters to be communicated. Right? Designing the confirmation request. Fourth one is following up. These are the four methods that has to be followed. They can ask this as a full heading, full question, or they can ask the designing part only separately, some 5 marks question. So the procedure to send it is select the party, design, or this. First one is what? Sorry, come again. What information to be communicated, to whom it is communicated, you should design that and follow up. These are the 4 things has to be seen. Meaning of external confirmation and important terms. External confirmation means audit evidence obtained as a direct written response to the auditor from a third party, that is confirming party, in a paper form or in electronic form or any other medium. It can be any other medium also. It need not be paper or electronic form. There are 2 types of request confirmation. One is positive confirmation request. Second one is negative confirmation request. A request that confirming party responds directly to the auditor, indicating whether confirming party agrees or confirming party disagrees with the information in the request. Then negative confirmation request, a request that the confirming party responds directly to the auditor only if the confirming party disagrees with the information provided in the request. If it does not agree, then reply it. If not, no. Then non-response, failure of the confirming party to respond or fully respond to a positive confirmation request or a confirmation request returned undelivered. They are using here to a positive confirmation request. If you don't get response or if you don't get full response, that is what we call it as non-response. If it is for negative confirmation request, can we tell that? If there is any non-response for negative confirmation request, can we tell that it is what is this non-response? Why? Yeah, generally whenever the party agrees, he should not reply that only. That is what the negative confirmation request tells that. So when you tell that don't reply if you agree, it does not mean that non-response. He is agreeing, because of which he is not giving the reply. The method of selecting that negative confirmation request. Then exceptions are oh, that's okay. Exception means deviation or difference. Then what is the audit procedures for external confirmation? Determining the information to be confirmed or requested. First point. Selecting an appropriate confirming party. Design the confirmation request, including the request that are properly addressed and contain the written information, and sending the request including the follow-up requests. These are the four things. Select the information, select the appropriate party, design that, and send it and follow up. Whenever, the third point I am discussing now, third point, whenever you are designing the confirmation request, what factors you should be considered while you are designing that? The factors are what assertions being addressed. What assertions means what? If you remember our financial statements audit, there are multiple assertions of balance sheet, also multiple assertions of P&L also. What assertion you want to get confirmation? You want to, sir, I want to check as per 505, as per 505, sorry, 501, physical variant inventory are in third party godown. I want to get external confirmation. What you want to communicate? Sir, I want to communicate, get the confirmation with respect to quantity and condition of inventory. That's it. I don't want to know the value. So what assertion? Is it existence assertion? Is it valuation assertion? Is it cutoff assertion? Any assertion you can tell. Then is there any risk of material misstatement, including the fraud risk also? That also has to be considered. Layout and presentation of confirmation request. What is layout and presentation of confirmation request? What way you want to send it? Entirely the questions first, then later answer. Is it in the fill in the blanks, or you tell that yes or no kind of things? Prior experience on the audit or similar engagements. You decide. If you want to get 100 responses, it is not that you should send only to 100 people. In the last time you did the audit, maybe this employee, this company, or any other audit company, only you get 80% of the things as reply. That means if you want 100, then 100 into 100 by 80, you should do that way. Then only 120, 130 requests you should spend. You will get 100 requests. Again, method of communication. What method you want to communicate? Are you directly want to go there, or send it by a mail, or send it by a fax? What method? And you should get the management authorization to encouragement to confirming parties to respond to the auditor. That management has to tell to the third party that you should confirm to the auditor directly. And last one is ability of the intended confirming party to confirm. If the intended party to which I want to get the confirmation, if he is unpad, illiterate, or if he is not going to open any mails or letters only, then no, it is no use of getting confirmation. There is one more possibility that whenever I want to communicate with the third party, management sometimes refuse to communicate. Refuse me to communicate to third party. So why? Why they are refusing? So just because they refuse, should I change my opinion? No, you should not immediately change your opinion. Opinion means report. You should try to see why they are refusing it. If they are refusing it and the refusing reason is genuine reason, that has to be considered. In that case, try to perform some alternative procedure to get the audit evidence. If it is not possible to get any evidence after that also, then go for 705. Ultimate option is 705. If whatever they are telling, refusing, that is not, what is this, not correct only. That is not reasonable only. They are unnecessarily telling that I don't like because you are wearing green color shirt, you are wearing yellow color. What nonsense you are talking? Then you try to perform alternative procedures. Not possible. 705, directly finish it off. So you should inquire the management the reasons for refusal and seek the audit evidence as to their validity and reasonableness. As to their validity and reasonableness. Why it is being refusing. Then evaluate the implications of the management refusal on the auditor's assessment of relevant ROMM. If they restrict me, can I get sufficient audit evidence with respect to risk of material misstatement? Then yes. Perform alternative procedures designed to obtain relevant and reliable audit evidence. Sir, what evidence? I can go for inspection, observation, any other methods of evidence you can get it, other out of those 7. Then, if the refusal is unreasonable, then you communicate with the TCWG. Management refuses, then go to top level. If the TCWG equal to management only, then no need to communicate also. Then if the refusal is unreasonable, then determine the implications as per 705. Then why must auditor seek evidence of validity of management decision? That's okay. Negative confirmation. What is this negative confirmation? You remember that negative confirmation request NCR? Every auditor should always send positive confirmation request. Always means always, except under the following situations. There are only 4 situations where you can send a negative confirmation request. If not, you can't send the negative confirmation request. Negative confirmation request provide less convincing evidence compared to the positive confirmation request, because there is a possibility that the party might ignore also. When they ignore, they tend not to reply. When they tend not to reply, I tend to believe that they agreed it. That is why it is less convincing for me. I should not go on that evidence, less persuasive evidence on the positive confirmation. The auditor shall not use negative confirmation request as a sole substantive audit procedures to address an assessed ROMM at an assertion level. Assertion means every item level, inventory, PP, debtors, creditors, unless all the following conditions are present. You can't use that. When those conditions, the auditor has checked all those things, risk of material misstatement, and decided low, and has obtained sufficient and appropriate audit evidence regarding operating effectiveness of internal control. Every internal control is correctly working, nothing wrong. And I felt no risk of material misstatement has been obtained in obtaining sufficient and appropriate audit evidence. Then you can go for negative confirmation request. Plus, that means all the conditions have to be present. Risk of material misstatement is low and internal controls is operating working effectively. First one. Second point is, whatever the population you want to get the confirmation, that is homogeneous of small size. That means homogeneous means similar items only there. Similar items means almost same items, and small value are there. Small size. Then very low exception rate is expected. Very low exception rate is expected means what? The other party, the moment I send it, it is very less likely to they not respond. If they receive the letter or mail, definitely they'll respond. Exception means deviation. ನಾನು ಕಳಿಸಿದ್ರೆ ಅವ್ರು ರಿಪ್ಲೈ ಮಾಡೇ ಮಾಡ್ತಾರೆ ನೋಡಿದ್ರೆ, ಯಾವಾಗ ಅವ್ರು ಡಿಸ್ಅಗ್ರಿ ಮಾಡಿದ್ರೆ ಅಂತೇಳಿ ನಾನು ಅಸಂಪ್ಷನ್ ಮಾಡಿ ಐ ಶುಡ್ ಗೋ ಫಾರ್ ನೆಗೆಟಿವ್ ಕನ್ಫರ್ಮೇಷನ್ ರಿಕ್ವೆಸ್ಟ್ ಇಫ್ ದೀಸ್ 3 matters are fulfilling. What is the 3 things? See, auditor should not use negative confirmation request as a sole substantive audit procedures unless all 3 conditions are present. First one is risk of material misstatement is low, assessed low, and internal controls are working effectively. Second one is population is homogeneous, large number of items of small value. Third one is very low exception rate is expected. Whenever you get the evidence, does it mean that is entirely reliable? You should evaluate whether the evidence obtained has been trustworthy, not trustworthy, all those things. So, if the response by the appropriate confirming party indicating an agreement with the information provided in the confirmation request, agreement means acceptance. I told sir 10 lakh rupees, he also told yes sir 10 lakh rupees only, then no problem. If the unreliable response is there, what is unreliable response? A response deemed unreliable by the auditor. For example, I told sir, is it 10 lakh rupees or not? He sent only half of the thing, or he sent, I asked about creditor, I gave the details about debtors. That is unreliable. Then non-response, failure of a confirming party to respond or fully respond to a PCR or a request returned undelivered. That is also a non-response, an exception. This is what it is there. This is 505 external confirmation. Shall we look into exam tips? Now we will begin audit of banks. This is one of the important area where around some 10 marks on an average will be tested in this chapter. The important areas are at the bottom. Initial areas are entirely the introductory part, just to understand the banking point of view. See, this chapter mainly focuses on audit related part as well as income recognition related part as well as drawing power related and those extra points. So ICA is trying to I will definitely try to trick you with respect to those things. Is it a standard asset, substandard asset, all those things. So a two questions or a single question of 5 or 6 marks from this descriptive, maybe it can come for some MCQs, or they can ask entirely one case study for 10 marks entirely from this bank audit chapter also. So initially, what is bank? Bank is an institution, financial institution in which they accept the deposits and they give the loans. That is what we call it as bank. There are different types of banks. Types of bank is not important. I'll not discuss everything. First one is commercial banks. What is commercial bank? Where a bank which mainly does accepting deposits and granting the advances is done by mainly commercial banks. Commercial means they mainly for commercial activities. They don't say that okay, rural area we should give, other area we should give. No, it is a widespread banking institution in India and which has two main functions. What is RRBs? Regional rural banks, mainly established in rural areas to facilitate the rural communities. Example, Karnataka Gramina Bank is there, Bangalore, or this Karnataka Gramina Vikasa Bank is there. Some other Gramina banks are also there. Then comes cooperative bank. Cooperative banks means the main principle of their cooperative bank is cooperative principles. What cooperative principle? They'll like what? They contribute the money, they give the loans to themselves. The cooperation is there. Then payments bank, mainly Paytm payments bank and all those things, mainly accept the deposits, but having a limited, they'll give ATM card also, but limited transactions are there, around 2000, all those things is there in that. They can avail ATM cum debit card, but loans and credit cards are not possible. Developmental banks mainly for developmental activities like infrastructure project, dam, or maybe solar activity, those kind of things like IDBI, ID, SIDBI. Small financial banks. What is small financial bank? It is like AU Small Finance Bank, Equitas Small Finance Bank. Their main purpose is to cater the unrecognized and unserved sector like small marginal farmers, micro and small industries, or maybe this roadside vendors, fruit vendors, etc. AU Small Finance Bank, Equitas, etc. Now comes the regulatory body for all the banking companies in India is Reserve Bank of India. It doesn't matter what type of bank you are, but the RBI is the regulatory body for you. So what is the role of RBI? RBI will act as the central bank of country. RBI is responsible for development and supervision of constituents of Indian financial system. That means trying to establish the banks and all those things, giving the license, determining and in conjunction with the central government, monetary and credit policies, keeping in view the need of the hour, whenever it is required at what is required, based on that talk to the central government, issue the policies and try to regulate the currency, credit rates, interest rates, everything is being done by RBI only, and regulate the activities of commercial or other banks. That means whenever somebody is going out of the market, like giving loans at 20, 30, 40%, trying to regulate. Again, somebody is going for 5, 6%, 3, 4%, then also it is being regulated. Everything is being regulated there. What are the important functions of RBI? We know that they should issue the currency notes 500, 100, 200, everything. The regulation of currency issue. What is regulation of currency issue? They should check that how much currency has to be issued in the country. Is it 20 lakh crore, 30 lakh crore? Everything has to be regulated. Depending on what? Depending on the economic system of our country. Again, acting as a banker to the central government as well as state government. Acting as a banker to commercial and other types of banks, including the term lending institutions. What is the regulatory framework for banking? This is important. Banking is subjected to many regulations. One is BR Act 1949, Banking Regulation Act, SBI Act 1955, Companies Act 2013, Regional Rural Banks Act 1976. Many acts are there. Even IT Act also will come here. Anything which is concerned to the bank is discussed here as an act which is the regulatory authority. What are the peculiarities involved? Peculiarities means features or not importance, features of a bank. Banks are always dealing with a huge volume and complexity of transactions. Huge volume means I only do at least some 10,000 transactions in 1 year in one account. Maybe UPI I do, I'll drink tea, I drink coffee, I drink coconut water, everything I'll do it. Huge volume of transactions for a single party. Look at the company also, look at every type of entity also. Again, there are some complexity of transactions like forex transaction, hedging, all those things. Wide geographical spread of banks. What is wide geographical spread of bank? They are spread all over the India. SBI has almost 20,000 branches. So large range of products and services offered. It is not just the acceptance of deposit. Take the loan, take the credit card, take the debit card, housing loan, car loan, education loan, marriage loan, personal loan, many things. Forex, a letter of credit, a letter of undertaking, many things are being offered. Extensive use of technology. The banking system is entirely standing on technology only. Earlier it was book entry system. If you look at the Lucky Bhaskar, that at that time Lucky Bhaskar movie, partly computerized, partly book entry. They used to do the computerized for monthly ones. The book entry is for only entire month. Then strict vigilance by the banking regulator. That means RBI is having strict regulator for these banks. What are the types of reports bank auditor has to give it once you do it? We call it as central statutory auditor. I'm talking about statutory central auditor. He used to give report on IFC, internal financial control or financial reporting. He used to give report on mainly five things, which we will discuss in 143.3, where we left it as per Caro. Then long form audit report has to be given. SLR compliance report, statutory liquidity ratio, compliance requirement ratio. Because every bank has to keep at least 18, I think as of now 18% of net demand deposits as statutory liquidity ratio. Then treasury operations report, then IRAC report, income recognition and asset classification standard, substandard. Income recognition is only on accrual basis, except that wherever there is a default, then go for cash basis, non-relation of interest part. Then serious irregularities report has to be given. Ghosh and Jilani committee report also has to be given. Then adverse credit deposit ratio. What is adverse credit deposit ratio? Always bank should have more loans and lesser deposits. Adverse deposit means exactly opposite or going beyond the limit. That is called as adverse deposit ratio. Audit approach, we will see it later. Conducting an audit also we will see it later bit. Come to point number 6. Come to point number 6. Income recognition policy and form and content of financial statement. What is income recognition policy? How the banking should recognize the income? Banks should always see what is the income for the bank. Highest income is interest. Interest on the loans given. Second one is again deposits made, investment, debentures, multiple things are there. So how do they recognize the income? Generally they recognize income on accrual basis unless until there is an NPA. If it is an NPA asset, then all the income from NPA asset realized only on cash basis recorded. Other than NPA asset, then cash accrual basis only they'll record it. Income from non-performing asset is not recognized as an accrual basis, but is booked as income only when the actual it is received, only on NPA. Form and content is okay. The form is on balance sheet form A, P&L account form B. Then they should even compliance with accounting standards also because they are a company, banking company. Audit of accounts has to be done as per section 30 bracket 1. And eligibility qualification, disqualification of auditor is as per same as Companies Act 2013. Now comes who will appoint the auditor. What is the remuneration for the auditor and what are the powers and auditor's report. Appointment is for the banking company. We will come from the other way. If you are doing nationalized bank audit, then it is appointed by board of directors plus RBI approval is required. Nationalized bank. If it is State Bank of India, C&AG will appoint in consultation with central government. But if it is subsidiaries of State Bank of India, then it is SBI only will appoint them auditors. Then in other cases, in any regional rural banks, directors after approval from the central government. In all the other banking companies, shareholders will appoint it an annual general meeting by RBI approval is required. SBI, C&AG will appoint nationalized banks, board of directors with RBI approval, RRB, board of directors with RBI approval, RBI central government. Central government approval, other bank subsidiaries of SBI only appoint, other banking companies, shareholders will appoint in a general meeting, treating it as a normal company. Now with respect to remuneration, who will fix the remuneration? Remuneration fixing is generally at as per section 142. Shareholders only will fix the remuneration. But in case of government banks, remuneration is fixed by C&AG. If the advances, that means loans given by the company is so and so, then your fees is so and so. This if it comes on the second slab, again third slab, again fourth slab, the fees also keeps on increasing. But the fees is paid by banks only, but fixed by RBI. In case of government banks mainly, nationalized banks, fixed by Reserve Bank of India in consultation with central government. What are the powers of auditor? Normal powers as given under section 143 of Companies Act. What are the auditor's report for nationalized bank? he should give whether in his opinion the financial statements present true and fair view of the affairs of the bank. That means audit report, normal audit report has to be given. Along with that, whether transactions of the bank have been made within the powers of that bank or not, that also has to be given. Whether or not the returns received from the office and branches of the bank have been not been adequate, then any other matters that should be brought to the notice of central government, that also has to be reported in the audit report of the auditor. Auditor's report to SBI, that will be given for President of India, that is made to central government, that is President of India. Then LFAR is like not so important. It is like one question and answer format. Question yes, no, not applicable. Question yes, no, not applicable, and explanation is not required. That reporting to RBI also extra is there. Mainly CRR report, SLR report, all those things. That is for auditor's appointment, remuneration, powers, and auditor's report part. Then comes advances part. Advances part. What is advance? Any money given to the public by way of loan is called as an advance. So there are two types of loans. One is funded loan, second one is non-funded loan. What is funded loan? Any situation where there is an actual outflow of the money from the bank. For example, you take a personal loan, take the money and go out of the bank. That is called as funded loans. What is non-funded loans? Where the actual money outflowing is not there. For example, giving letter of guarantee, letter of credit, letter of undertaking, etc., etc. That is what you call it as non-funded loans. And what does advances comprise of? Everything in any form given by the company to outsiders. Term loan, cash credit, overdraft, payment bills, bills discounted and purchase, preparation of risk sharing basis, interest bearing staff loan, etc., etc. Everything is included that. That's it. Remaining 3 points are okay. Not so great. Then comes modes of creation of security. Yesterday, not yesterday, in the law marathon, we discussed creation of charges, security, registration of charges. Here also, how do you register the security? Not registration, but creation of security. There are mainly 5 modes of creation of security. Either you create the security by way of mortgage, or you create by way of hypothecation, or you create by way of pledge, or you create by way of assignment, or you create by way of set off. Lien is also there, but that is not way of creating the security. That is taken security. What is mortgage? Whenever the an outsider want to take a loan and want to give something as security with respect to immovable property, then if that immovable property is registered in the name of bank, then that is called as mortgage. Then comes these two things, hypothecation and pledge. Sir, what is the difference between hypothecation and pledge? Both hypothecation as well as pledge can be done with the only movable properties. It is not an immovable property. Immovable properties for mortgage, movable properties for mortgage, hypothecation and pledge. The biggest difference between mortgage and hypothecation and pledge is, in case of hypothecation, possession is also there with the customer. But in case of pledge, possession is there with the bank party. Like gold is being pledged. That means gold will be kept in their lockers and they will give you the loan. What is hypothecation? I'll take a car loan. Car is also with me. Loan I have supposed to give it to the bank. Hypothecation generally happen for those category of things. Then set off. What is set off? Mutual payable and receivables is being set off by the bank. And assignment. What is assignment? Assigning the security to some third party or the other category. When I say mortgage, there are 2 types of mortgage. One is registered, second one is equitable mortgage. So what is registered mortgage, what is equitable mortgage? Consider this building is on my name. I am telling the bank I want 10 crore rupees loan. Then bank told, okay, you register this building on my name and take 10 crore. Then this is called as registered mortgage. What is equitable mortgage? Sir, I told I want 5 crore rupees loan. Then they told, okay, bring the original papers, give me the original papers, take the loan. You don't need to register in my name. Let it be in your name only, but give me the original documents of the building. That is what we call it as equitable mortgage. Equitable means without registration, transfer of ownership, but just submission or delivery of the original documents. Register means change of ownership is generally happening in case of registered mortgage. You have a look into it once, those things, whatever we discussed. I'll give some. So with respect to asset classification and NPA norms, first of all, you should understand what is non-performing asset. Non-performing asset is an asset in which stops to generate the income for the bank. What is the income for the generation of income for the bank? Interest. If you are not able to generate any income, or you are not able to even repay the principal portion also, then it is called as non-performing asset. So when I say it stops generating income from to the bank, it is non-performing asset. It is not exactly the same wordings. The exactly wordings are when there is a default in payment of interest or principal or anything to the bank, and the default continues for a period exceeding 90 days, then only we call it as non-performing asset. 90 days it crosses, then 91st day it is a non-performing asset. Now, whenever it becomes a non-performing asset, there are, okay, assets can be categorized into two things. One is performing asset, second one is non-performing asset. Performing asset means anything which is less than 90 days default or no default comes under performing asset. Anything more than 90 days default is comes under non-performing asset. So for that, we actually discussed in this with the help of this chart in the class. So income on NPA will be recognized on cash basis. We know that. So how do you classify the assets? Assets is classified as performing asset and non-performing asset. What is performing asset? Standard asset is called as performing asset. The other name for standard asset. Non-performing asset is any asset on which the interest or principal or both is overdue for no more than 90 days. Is overdue for more than 90 days. Then we call it as non-performing asset. And the non-performing asset again recategorized into three sub-classifications. Non-performing asset is a broader category. One is the substandard, doubtful, and loss assets. Sir, what is this substandard asset? Substandard asset is an asset from the date of NPA. For example, this was the date of NPA. If it is considered, this is 364th day. Till this period, from the date of NPA, it is called as substandard asset. An asset which is a substandard asset is an NPA which has not exceeded 1 year from the date of NPA is called a substandard asset. After that, the doubtful asset will come. Sir, what is doubtful asset? Any asset which is an NPA for more than 1 year is called as doubtful assets. Again, that is categorized into three sub-classifications: D1, D2, and D3 asset. What is D1 asset? Consider this is NPA date. Up to 364 days, it is substandard asset. After that, it comes as doubtful asset only till this point. But from this date till 1 year, it is called as a D1 asset. From this date plus 2 years, it is called as D2 asset. After that, it is called as D3 asset. Or it is even called as loss asset. It is also called as loss asset. So, substandard assets are those assets. If an asset is an NPA and continues up to 12 months, it is not exceeding or not these things, up to 12 months from the date of NPA. Doubtful asset means if an asset continues to be NPA for more than 1 year. NPA is more than 1 year. Then loss asset is if an asset is an NPA for more than 3 years from D1 category. Or it is if an asset is NPA for more from D1 it is NPA for 3 years, because D1 till 1 year it is D1 only. After the 2 years it is D2 only. That means 1 plus 2 it is 3 years. From here it is loss asset. More than 3 years from D1 category, or it is as same as D3. Loss asset is similar as D3. What is D1 asset? Up to 1 year from date of NPA. What is this? Doubtful asset, right? Substandard, this thing. There is a mistake here. Substandard asset. Doubtful. Up to 1 year from the date it became substandard asset. D2 is 1 to 3 years from substandard asset. then again it is more than 3 years. And if it is standard asset, substandard asset, doubtful asset, loss asset, how much, why are we making provision, why are we discussing this? Because we should make a provision for non-recoverability or uncertainty period which might happen in the future. Sir, how can we make the provision? That depends on what type of assets you are. If you are a performing asset or standard asset, you should make 0.4% of the outstanding amount as provision. That means if you have given 10 lakh rupees as loan, 10 lakh into 0.4%, that is 40,000. You have to keep it aside, that thinking that there is a chance of 0.4% probability in defaulting part. If it is agriculture related loans, now only 0.25 is sufficient. 0.4 is not required. But if it is non-performing asset, standard asset is 15% of the outstanding amount. Doubtful asset is, it depends on D1, D2, D3. Again, it depends on secured or unsecured. If it is secured, 25, 40 and 100 is there. If it is unsecured, everything is 100%. If it is last asset, give 100% provision or remove that from the books of accounts only, write it off. Put it out. Sir, I agree, sir. What is it? Doubtful, secured, 25, 40, 100 is there. I agree. But up to more than 90 days is non-performing asset. But before 90 days, consider I am supposed to pay on 1st January. I did not pay. When it will become NPA, from 1st April it becomes NPA. But what about this period? Is there any classification? Yes, there are 3 classifications. SMA 0 account, SMA 1 account, SMA 2 account. Special mention account 0, special mention account 1, special mention account 2. So what is the special mention account 0, 1 and 2? From default date up to 30 days, it is special mention account 1. 30 to 60 days of default, special SMA 1 account. 60 to 90 days, it is SMA 2 account. 91st day, it is non-performing asset, directly jumps and goes away. So there it is written. Yeah, this timeline also there here. If you want, you can loan taken here. This timeline is given here. You can go through that. SMA 0 from 0 to 30 days, 31 to 60, 61 to 90 days. From 91, it is non-performing asset. This is what income recognition and asset classification provisioning. Income, how you recognize? Income is recognized based on NPA, based on cash basis, only when it is received and not when it is accrued. Then there is one more concept called as out of order. What is out of order? Mainly this is applicable for this working capital category. Okay, we'll discuss that out of order and then we'll take a break. If there is any account that should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioned limit or drawing power. For that, we should, I think you should remember that working capital calculation. Whatever that is calculated mainly based on 2 things. One is the repayment capacity, second one is security given. Repayment capacity will decide how much has to be given. There are 2 limits. One is sanction limit, second one is drawing power. Sanction limit is based on the security you give, repayment capacity is based on the income that you show. That is why based on which they decide the category. So you should tell the outstanding balance remains continuously in excess of sanction limit or drawing power. In any case, then it is called as out of order account. Once it is out of order account, then NPA provisions will apply. Or in case where the outstanding balance in the principal account is less than the sanctioned or drawing power, but there are no credit for a period of 90 days from the date of balance sheet. First one is the money available, the money drawn from the CCOD account is more than the money which I should draw continuously in excess of drawing power or sanction limit. Second category is you did not draw more, but whatever the money you are supposed to pay it, you did not pay even a single rupee also for a period of 90 full days, 3 months generally. Third one is credits are there, you are paying some money, but the money, whatever the money you pay, that is not sufficient to cover the interest part also. First one is drawing power is more than sanction limit, not drawing power. Outstanding money is more than drawing power or sanction limit for consecutive period. Then second one is there is no credit for the account for 90 days. Third one is even if there is a credit, it is not sufficient to cover the principal portion alone. They have given an example here. You can go through that. Overdue is okay. Standard asset, doubtful asset, last asset. Notes on NPA classification. We'll see that. So we'll take a break now. After the break, we'll see you. So out of order, there are three conditions. Whenever the outstanding balance remains more than sanction limit or drawing power continuously, or whenever there is no credit to that account for 6 months. Second point. Third point is even there is a credit, that credit is insufficient to pay even interest also. Then we call it as it is an out of order. Then comes, so NPA. How do you classify NPA? NPA is mainly classified based on record of recovery. What do you mean by record of recovery? If you receive the money, then it is considered as not an NPA. If you don't receive it, then it is an NPA. So availability of security or net worth or of the borrower or guarantor is not to be taken into account for the purpose of treating account advance as NPA or otherwise. Sir, he has given a land of 10 crore rupees, he taken only 2 crore rupees of land. Why do we treat it as NPA? He not paid for 3 months. No, I don't care. Did he pay the money? No. Whether he has some 1000 crore rupees of security also, I don't care. This NPA is mainly categorized based on record of record of recovery. Is it recovered? Not recovered? Doesn't matter. NPA. 90 days more than that. Then asset classification would be borrower wise and not facility wise. What do you mean by borrower wise and not facility wise? Consider he has taken housing loan and personal loan and education loan. He paid both the loans, but he did not pay one loan. Then you don't just consider that education loan as non-performing asset. You consider entire borrower facilities only non-performing asset. All the facilities including investment in securities should be termed as NPA. Then accounts regularized near balance sheet date. What is accounts regularized near balance sheet date? See, you should pay attention to those accounts which has actually regularized near the balance sheet date. Why? Because sometimes bank manager does call the customers who are not paid for a longer period of time. They give some extra money, or they tell the customers, "Sir, you pay it now by April 10th, or we will re-sanction that money." So that is how they try to do it. Why? Because their incentive, their bonus, everything is dependent on that promotions and etc. So as a auditor, see, there could be genuine cases also. Somebody will come for settlement, one-time settlement, they pay the money and they go away. If not, sometimes it happens this way. So it is better to go for as a checking of those things thoroughly. Accounts which are regularized near the balance sheet date. Asset classification of borrower accounts where a solitary or a few credits are recorded before balance sheet date should be handled with care and without scope for subjectivity. You don't make any assumption. Subjectivity, don't bring it. Just be an objective part. Where the account indicates inherent weakness on the basis of data available, the account should be deemed to be an NPA. That means the same customer only took one more loan from the bank and again this account is being closed. That means even then that looks like repayment of loan. No, don't consider performing asset. It is still NPA only. The auditor should check for sample transactions immediately before and after and immediately after the closing the financial year. That means some 10 days before, 10 days after, or maybe 15 days, 20 days. Then comes government guaranteed advances. There are two types of government. One is central government, second one is state government guaranteed advances. If it is state government guaranteed advances, don't take anything seriously. Whatever it is, the normal provisions are, they just go by that part. But if it is central government guaranteed advance, then those assets you don't treat it as NPA unless until the government has revoked the guarantee. If the government has already revoked the guarantee, treat it as normal as advances only. If the central government guarantee is still persisting, then you don't treat that as NPA. You treat it as performing asset. But when it comes to the recording of interest, you record that on cash basis, don't go on accrual basis. Then advances under consortium. What is advances under consortium? Consortium means group of banks coming together to lend some money to a single borrower or multiple borrowers. So whenever somebody want a huge amount of money, when a bank cannot afford so much of loan to a single party, then they try to make other banks also to be part of the entire advance group. So in that case, the bank which gives the highest share of money will be called as the lead bank, and other banks who are like 10, 20, 30, 40% of the category are called as other banks. Now there are two types of recovery. Now consider SBI, HDFC, Canara. SBI gave 500 CR, HDFC and Canara gave 250. Total 1000 crore is given to Mukesh Ambani. Now at 10%, every year he should pay 100 crore rupees of interest. Now whenever that money is being utilized, he should what is this? banks should, when the money is being utilized by the Mukesh Ambani and he is paying 100 crores, he has two options to pay it. Either he can pay entire money to lead bank 100 crores and the lead bank should distribute 25 crores to HDFC and Canara and keep it 50 crores with themselves. Or the Mukesh Ambani only directly pay 50 to SBI and 25 to HDFC and Canara Bank. When they directly paid directly to the respective bank, there is no problem. But when the money is paid to the SBI and SBI did not pay to the Canara or HDFC, then also in the books of HDFC or Canara, you should treat party as non-performing asset only. Sir, Mukesh Ambani paid for SBI and Canara, but HDFC not paid. Yes, in the books of HDFC is a non-performing asset advances. So that should be considered. That is one option. Then comes erosion in the security value or of borrower fraud. What is erosion in the security value? Erosion means what? Significant reduction in the value of any assets. Any asset. Then that should be categorized as what? It depends on how much reduction happened. Sir, it is 50% reduction or is it 90% reduction? We have to see. But here, see, whatever we are discussing, government guaranteed advance, consortium, they are important independently. Significant reduction in the value of security where normal asset classification stages are bypassed. That means 3 months, 6 months, all those things not happening. Directly went from 100% asset to 10% asset. Bypass. That means cross that. If the realizable value of the security falls below 50% of the value assessed earlier, that means last time when you went to that property, you thought 100 crore rupees was the value of property. How much loan outstanding, you don't care. Now the value of the building, because of some outside factors, that has come down to 50% or less. That means 40 crore, 30 crores it happened from the last assessed value. In that case, you should treat it as a doubtful asset. Which doubtful asset? D1 asset. D1 doubtful asset. Second category is if the realizable value is below 10% of outstanding amount. You don't check the value of the property, you check value of the loan which is outstanding. Sir, 100 crore rupees is the pending amount. Value of the property, but pending is only 40 crore rupees. Now, when the value of the property come down from X to Y, check that Y and outstanding amount, how much you should get and how much is the value of property. If it is less than 10% of outstanding amount, then you directly treat it as loss assets. For example, loan is equal to 100 CR, outstanding amount is equal to 50 CR. The security value is 200 CR. For example, 200, not 200, we'll take it as 150 CR. Now, when I say because of some XYZ factor, the value of the asset on that balance sheet date, it is assessed at 150 CR only. Latest assessment is 150. The value come down to 60 crore because of some XYZ factor. Then you check what was the last assessed value, 150 CR. How much it is now? 60 CR. 60 by 150, less than 50% will come. Because 75 is 50%, 60 is less than 50, then it is called as D1 asset. No, sir, it did not become 60 crores. It became what is this? 4 crore rupees. It became 4 crore rupees. Now you check 50% part, you will keep it aside. You check this outstanding amount is 50. What is 10% of 50? 5 crore rupees. What is the actual value now? 4 crores. It is less than 10% of the value of outstanding money. Then this is called as the loss asset. So for doubtful asset, compare this value. Don't take the loan amount. For loss asset, take the outstanding loan amount and compare with the actual value. Understood the difference? Then advance against National Savings Certificate, KVP, Indra Vikas Patra, etc. As long as the adequate margin is available in the books of account, then don't treat it as NPA. You can still treat it as performing asset only because they are 100% liquidatable. Agriculture advances which are affected by natural calamities. What is agriculture advances? See, when I say agriculture advances, they are not as per normal guidelines, normal loans and advances, because agriculture items are being produced and the crop will come maybe after 6 months, after 1 year. There is so much of time gap between putting the money and getting the money back. That is why the bank should treat that crops as two types. State level banking committee will tell that, state level banking committee, which crops are long duration crops, which crops are short duration crops. Sir, how do you consider what is short, what is long? If there is any crop which is takes less than 1 year from the date of sapling, installing the sapling till the harvesting, we call it as short duration crops. Any crops which takes more than 1 year to get harvested, that is called as long duration crops. So if it is a short duration crop, the loan you have given, in that case you check if the short duration crop is overdue for 2 crop seasons, then it is non-performing asset. If the long duration crop is overdue for 1 crop season, then it is non-performing asset. Then advance to staff. In case of advance to staff, what it is there? Generally, there are some provisions like you pay first principal, then only you can pay the interest. Just because you don't receive the interest in the beginning time, you don't treat it as non-performing asset. You still treat it as performing asset as long as it is continuously being paid. That is what it is there in advance to staff. Actual calamities. Okay, that is that and this thing are connected here. Then comes computation of drawing power. Drawing power computation is generally done for working capital loans. Working capital loan. Sir, what is this working capital loan? Whenever you take money not for long-term projects but for a day-to-day operations, keeping the current assets as security. If you remember that clause 2 of CARO, second part, if you have availed more than 5 crore rupees of loan on current assets, you should file quarterly returns to the banks. The similar things here. I am not talking about the amount, I am talking about the loan, working capital loan. If it has availed, how much amount? I am talking not from customer angle now, that is from client angle. Client should tell that they should file income, quarterly returns, everything. Now I am talking from bank angle. How much money I should give to them? Mainly, whenever the loan is given, there are 2 things which are mainly based. One is repayment capacity, second one is security. Repayment capacity and security. How much our the repayment security is there, so much amount of sanction limit will be there. How much you can repay, so much amount of drawing power will be there. If your repayment capacity and security is at certain level, you can keep sanction and drawing power same. If not, sanction limit will be higher and drawing power will be bit lower. Now, how do you compute that all those numbers drawing power? It depends on how much inventory you have. How much inventory you have with respect to giving as a security. Sir, I have 10 crore rupees of inventory. Now they keep some 20% margin. Okay, when I say inventory, what items are considered? For the purpose of that, items are considered as, one is inventory is considered, then mainly debtors is considered. Debtors means that receivables, trade receivables or accounts receivables are considered. When you say inventory, whatever the total inventory which is there, minus credit purchases. Because if you don't pay the money, the vendor only will come and take that asset. It is not belonging to you. I am not ready to give the loan for you. Minus credit purchase. Minus if there is any absolute inventory that is outdated or anything, you remove everything. Then what is the net inventory which is there here? On that inventory, I will give only 80% of the money as advance. This we call it as margin. 80% is, 20% is margin, 80% is loan amount. The similar way debtors minus TDD, provision for doubtful debts, you should exclude, and many things are to be excluded. And the net debtor, I will give maybe some 90% as loan amount. Remaining 10% is a margin. Now, if you total these two things, 80% and 90% amount, that is called as drawing power. This is the money which you can draw at a point of time. Now, whenever you take that money, and if you don't pay for certain period of time, how do you consider it as NPA? That is what we are going to discuss. And this is stock audit is compulsory. When stock audit is compulsory, you remember that CARO, same thing. Where the mandatory, it is mandatory for those things where you taken more than 5 crore rupees of loan. You should do the audit, prepare a stock statement and file it with the banks. So this is important. 5 marks question may come in the examination. Drawing power is amount borrower can borrow from the cash credit based on the eligible current assets after margin. Sanction limit is total approved exposure, while DP is dynamic limit computed from available security at a given time. Accounts must remain within both DP as well as sanction limit. Any excess or irregularity should be reported to the management. For example, I have a sanction drawing power of 10 CR, but I borrowed 11 CR. Why? Because last quarter I had a 20 CR of assets. I borrowed 12 CR. I did not repay anything. Current stock is only 10 CR. That means my outstanding amount is 12, but only stock is only 10. That means it is exceeding the drawing power or exceeding the sanction limit. It can happen. That should be kept within that thing. Whenever you file that current stock statement, that should not be older than 3 months. That means every quarter you should file new statement. You should not file older than 3 months statement. Otherwise, it is an irregular account. Verify stock statement, compare with the financials, investigate the differences which is there. Ensure that DP is calculated as per the bank guidelines, etc. has to be done. Audit is compulsory for more than 5 crore rupees. That is how it is calculated. If you see drawing power, that was not there in that. The drawing power calculation, November 22 examination question. Raw materials are there worth 636 crores. They want to keep 25% margin. Advance amount this much. Finished goods, stock in process, stores and spares, book debt is debtors. Then stock in transit has to be excluded because stock in transit should be included, but unpaid stocks are LC, that is credit basis, that should be excluded. Nothing is there here. Then total is 39,225 crores you are eligible, but because it is 25% is minus in every case, almost every case, you will get 25,680 rupees as drawing power of sanction limit. Question you should exclude 25% for debtors, 30% for inventory. They tell if they don't give anything, then you do it with two assumptions. One is, as question is silent about the margin, I am not considering any margin, I am treating 0% as margin. Second is, you can take 25% for both and they can do it. You write some assumption, you should write that assumption. This is 5 marks question in the examination, they'll test that. Audit of advances. See, whatever we discussed earlier, funded advances, non-funded advance, creation of security, that is from bank's point of view. Now, whatever I am discussing, it is from auditor's point of view. How do you audit as an auditor with respect to advances? Mainly, you should see what is the amount included in the balance sheet in respect of the advances outstanding at the date of balance sheet. Advances represents amounts due to the bank. See, I am discussing about some characteristics of the advances. Amounts due to the bank are appropriately supported by loan documents and other documents as applicable to the nature of advance. If it is secured advance, property document should also be there. If it is unsecured advance, some salary receipt ITR should be there. There are no unrecorded advances. That means completeness procedure, completeness assumption. Every advance which is given in the current year should be recorded. And the stated basis of valuation of advance is appropriate and properly applied. The recoverability of advances is recognized based on their valuation. These things are okay. Provisions, appropriate provisions also should be made with respect to advance based on IRAC norm, income recognition and asset classification, based on performing asset, non-performing asset, 5.4, 0.25, that has to be done. First, this is important. This part. How do you evaluate internal controls over the advances? First, advances should be sanctioned only after assessing borrower credit worthiness and prior approval of the top level. See, if a beggar goes and asks 10 crore rupees of loan, definitely is not eligible. Even though he has so much of things, even though I have some property, they will not give the loan for me unless until I have a repayment capacity. So the loan is depending on credit worthiness of the borrower, and you should take approval of the respective hierarchy officer. If it is up to 10 lakhs, manager more than 10 lakh and up to 50 lakh, assistant general manager, if not deputy, if not main general manager, everything that goes. After the customer or client is having a credit worthiness, necessary documents must be duly executed before disbursement and end use of funds should be ensured. What is necessary document should be executed? Maybe application form, property documents, again mortgage, hypothecation, any things that has to be executed, and why they are borrowing the money. In banking regulation at RBI Act, they tell that the money should not be utilized for any security or stock market transactions or real estate transactions. Whenever you take the loan, other than you are a stock broker, other than you are a real estate broker, only those two people can do it. If I take money to invest in stock market, they will not give the loan. If you do it for marriage, if you do it want to go for foreign, something you want to do personal use, then you can get the money. Then adequate margin should be maintained and monitored regularly against securities. What is adequate margin should be maintained depending on the credit worthiness also. Some customers they maintain 25% margin, some customers they maintain 30% margin, some 10% margin, some adequate margin has to be there. Again, you should keep the securities must be in the name of banks, and proper registration and control also has to be done. Whenever you take some security for the loan, register that security in the bank's name. Physical securities should be verified periodically and it has to be inspected, because whether that is, for example, I took some gold loan. Gold is fluctuating so much that I should keep on verifying physically also, their valuation also should be done. If there is anything, then I should accept the security. Drawing power register should also be updated monthly and verified by an officer depending on the stock statement. Accounts must remain within the sanction limit and drawing power. It is for working capital loan, and whatever the irregularities are that should be reported. If advance accounts should be reviewed at least annually. Most frequently, large advances at least you should do at least once in every year. How does auditor obtain sufficient and appropriate audit evidence? You can do it. See the bank documents, account statement, application form, security things. That is common things, you can write it. Whether bank is complying with RBI norms or not, you can do that. There's no problem. Then comes income statement or P&L account items. Income statement or P&L account is mainly governed by Form B of third schedule. Balance sheet items are governed under Form A of third schedule. That is an MCQ question. If it is interest earned, interest or discount on advances or bills, interest income on investments, interest on balance with RBI and other interest funds, others. Any other interest or discount income not included in the above heads. Any other interest or discount. That means they should be separate heads for all these things, and all the things should be included, other things should be included in the others category. You should check that. Again, commission, exchange and brokerage. Commission, exchange and brokerage. Commission on bills for exchange, commission or exchange on the remittance and transfer, NEFT RTGS, commission on LOC, guarantee, yellow letter of comfort, loan processing, etc., etc. That should also be recorded separately as a commission or exchange. What is this? Exchange money and brokerage part for giving stock services and all. If there is any profit on sale of investment and other income, profit or loss on revaluation of investment, profit or loss on land or building or other assets, profit or loss on revaluation of fixed assets, profit on exchange transactions, income earned by way of dividend from subsidiaries, etc., etc. That should be under miscellaneous income. Everything should be there in that. This is important. How do you do the audit? Whatever we discussed, that is from bank's angle. It is audit. What is auditor's objective? Auditor should ensure that income is properly recorded, pertains to the period, it is complete and measured accurately. If there is 25-26 income, record in the 25-26 P&L only, that should be measured accurately. What is measured accurately? If it is NPA related income, don't record on accrual basis. If it is a then go for cash basis. If it is other than NPA, then record on accrual basis. As per RBI guidelines, if there is any income exceeding 1% of the total income, that is P&L's right side total income, or 1% of the net profit, that should be recognized on accrual basis as per AS9. And any non-material income items may be recognized on receipt basis without any qualification. That means generally they should go for accrual basis other than insignificant items. For insignificant income, they can go for any method. Accrual principle means I am not discussing that. You should do any accrual part only when there is, this line is important, reasonable certainty of collection. If you know that definitely it is going to come, definitely you should record it on that thing. Then what is NPA? Income on NPA should not be recognized until it is realized. That means cash basis. Then secured advances against deposits, KVP, etc., etc., may be recognized on due date if adequate margin exists. You don't need to check for money received or not. Bills purchased, discount income should be appropriated between two accounting periods. Bills purchased means you might have got the discount appropriate between this month, this year and next year. Bills for collection, as and when you receive, that should be on a throughout the year, that has to be recognized throughout the period. Renegotiation, LOC, that's okay. Remaining things you can manage with respect to this expenditure and all, not so important also. We can't discuss 100% of the bank audit, but whatever is important, I am discussing that. This is also important, bank audit approach. And you should check with respect to these things because it is very big. 18 points are there around this is. So how should be the bank audit approach? First, you should draw the audit plan. Then try to understand the control environment at the bank. Control environment means how the security systems are there. Is it password secured or watchmen are there? Anything. Then you do the engagement team discussions and execute the audit. So an audit plan should be drawn based on the nature and level of operations, nature of adverse features, level of compliance based on the previous reports, audit risk based on the inadequacy in or breach of internal controls and familiarization exercise carried out, etc. Based on this, you try to draw the audit plan. You don't overdraw the audit plan, you don't underdraw the audit plan, you just consider these factors before drawing it. Whenever you are trying to understand the control environment, then a bank should always have appropriate controls to mitigate its risk, including effective segregation of duties. What do you mean by mitigation of risk? If you give entire authority to a single person to approve it, to sanction the money, to disburse the money, he will sanction for his relatives and disburse for his relatives, and you only take the money and run away. That is why you should segregate. Segregate means divide the duties like, okay, you sanction, you sign it, you approve it, you disburse it, different people, so that control will be maintained between back end and front end officers. Accurate measurement and reporting of position should also be there. Manager should go and do the manager work, officer should go and do the officer work. Verification and approval of transactions, somebody will verify, somebody will approve it. So both the parties will be different, not the single party. Reconciliation of positions and results, setting up the limits. So what do you mean by setting up the limits? Depending on your position, we will give the limit. You can approve only transactions up to this amount. You can't go this thing. More than that, you go to the next officer, next officer, next officer. We'll set the limits. Reporting and approval of exceptions. What is approval of exceptions? Sir, I have a limit of 10 lakh only, but somebody has come for 11 lakh. But I don't have the authority. Manager is also not there. Okay, you do it, but you get the approval at a later point of time. Exception means doing other than the limit given. Physical security and contingency planning. Common control activity questions. Common control activity question like who performs the control? Does the person have the requisite knowledge and authority? What evidence is available to demonstrate that control is performed? Sir, because if you go and open it, if you want to try it, you can try to open the system. That is not going to happen because control is implemented. You need password, you need user ID. What is the proof? That is the proof. You can do that. When and with what frequency is the control performed? Every mid of the day or every mid of the week, they try to test it on a backend team. They try to hack the system. They will try to do it. Or is the frequency enough to prevent, detect or correct material misstatements? Where the evidence is retained, how long it is retained, is it accessible for audit, why the controls are performed, what type of errors are prevented, detected, etc. etc. Can activities be bypassed? How are exceptions or deviations are resolved? What is the time frame for resolution? This is more like practical and monotonous content. You should remember too much. Here it is entirely paragraph format. In the regular material, we give it like a point format separately. Engagement team discussion means what? Once you understand the entity, come and tell that where could the errors might happen, where could the frauds might be possible, which area we should focus on main, which area we should not focus main, which party should be engaged in what type of activities highly, that has to be discussed mainly. At the planning stage of an audit, the discussion ordinarily includes errors that may be more likely to occur. Errors which have been identified in prior years. Read the last year audit report and get it. Method by which fraud might be perpetrated by the bank personnel or others within the particular account balances and or other disclosures. Audit responses to engagement risk, pervasive risk and specific risk. Pervasive risk means risk at entire level. Specific risk means risk at a single item level. Need to maintain a professional skepticism throughout the audit. Yes, everybody has to maintain that questioning mind and being alert for every situation. Need to alert the information or conditions indicating that a material misstatement may have occurred. Some advantages are also there. You can specifically emphasize susceptibility, etc. etc. Go through that. So I'll read only this first point. Second 2-3 points, other points you can go through it. Whenever you are required to conduct an audit now, what is the first step you are required to do? You should do some initial considerations. Initial considerations. When the bank is trying to appoint you as an auditor, you should do these considerations. So what are those considerations? First of all, first one is you should declare your indebtedness. I am not indebted to the bank or subsidiary or anything, because as per section 141(3), any person who is indebted to the company for more than 5 lakh rupees is not eligible to do the audit. So you should declare your indebtedness. Auditor should declare, confirming that any indebtedness to the bank. After that, restrictions on internal assignments. Are you already doing some internal assignment like concurrent audit, internal audit, all those things? Because if I am doing already audit, there will be some self-review threat, because of which you might not report accurately. That is why you should check it. Then you should plan it. Whenever you are planning, check that SA 220 clients for acceptance and quality controls. Are there any money laundering activities? Are there anything? For example, recently HDFC Bank scam is happening. Not scam. Some top level people already resigned from the HDFC Bank. They invested in, I think, some Middle East countries, where some 1,000 crore rupees they gave it, and that has gone already, which is not going to come back. Something it is happening. And establish agreed terms of engagement as per 210. You should communicate with the previous auditor if you are a new auditor, because you talk to them, is there any problem, why did you get removed, what are the mistakes are there in the bank, where should I focus more, do you have any objection or concerns if I accept this thing, that also checked. Again, you should be clear with respect to what are your responsibilities, what are their responsibilities, what is the remuneration, and what is the scope of work, what is the objective of work. Everything has to be there in as per SA 210. That also has to be there. Initial consideration. That means before you start the work, initially you should do all these things. And you should even consider 510. What is 510? Opening balances. Initial initial audit engagement. No. Initial audit engagement, SA 510 opening balances. If you are the first time auditor for the bank, try to check whether last year closing balances have been correctly brought forward in the current year or not. Is there any material misstatement? If there is any consistency in the accounting policies or not, if not, then check it. Then you try to analyze the engagement risk also. What is engagement risk? If I accept here, other things are going, see, it is not audit risk, it is engagement risk. If I accept this audit, this will influence the acceptance of planning decision, etc. Then engagement team. As I told that in SQ1 and SA 220, your team should be competent, capable, and time should be there, and resources should also be there. So engagement team, you should prepare such a way that they are capable for this activity. After doing all these initial considerations, you try to identify and assess the risk of material misstatement, where something can go wrong while you are understanding it. How can you do that? Identifying and assessing the risk of material misstatement by understanding the bank and its environment, including the internal controls. Internal controls are working properly, internal controls are not working properly. Based on that, you try to understand the and assess the risk of material misstatement. After which, understand the bank's accounting process. What is accounting process? See, accounting process is not same for everywhere. It depends on entity to entity. Understand the risk management process. Engagement team discussion. What is engagement team discussion? Try to understand that what is the bank environment, where controls are there, where the controls are weak, where somebody can hack, where somebody can enter the system without any password and user ID. Establish the total strategy, which we discussed in chapter 2 later. Develop a plan. Audit planning memorandum. Memorandum means it is like a document where everything is mentioned. Determine the materiality. What is materiality? Anything which is based on some 1%, 2% of turnover, or maybe 5-10% of net profit, materiality, beyond which I consider material and I change my opinion, below which I consider it is immaterial. Consider the going concern as per SF 570, whether it is going concern or not. If it is going concern, then treat it accordingly. Assessment of fraud risk and money laundering, mainly 143.12. Fraud risk more than 1 CR, less than 1 CR, that also has to be checked here, and money laundering as per FEMA Act. If there is any specific risk, that also has to be checked. Risk associated with the outsourcing of activities. What is outsourcing of activity? For example, bank has given the loan for the purpose of recovery. They are not doing it. They appointed some outsourced authority to recovery agents. The recovery agents are going to the customer place and they only colluding themselves and taking some 5-10%, and they are telling that customer, I did not find the customers or clients. No, there is a risk also there also. And if you find any risk, how the bank is responding to that assessed risks. And stress testing. What is stress testing? Whenever there are some crisis, for how long you can hold this crisis, that is called as stress testing. No customers are borrowing the money, you are not getting the interest, COVID has come again, something has happened, because of which how long a bank can or this sustain this stress. Stress means no income, no only outflowing, something kind of thing. Basel 3 framework and other reports. That's it. You just remember the headings. Initial consideration is very important. Try to understand the entity, environment, risk assessment, engagement team discussion, planning, strategy, program, all those things. Some 5 marks they can ask if they ask. You go through this entirely one more time. That will be better. That is audit of banks. Even discussing only the important points also, it took almost more than an hour. If you have any questions, you can comment in the comment box, or you can contact us directly. We have a number given there. So see you guys. See you tomorrow. Bye bye.